All right, yo, what's up for everyone watching this on the YouTube replay? I hope you're having a great day. The market closes in about 40 minutes, so let me give you a quick portfolio update. Then we'll dig into some of the news, like Oracle is finally green on them. TikTok, actually, Oracle only owns like 15% of it, but TikTok's being sold to Oracle and stuff. It almost just looks like a pump for Oracle stock. But yeah, check this out. Our main portfolio, we're down 0.13%. We're just barely red on the day. Google's holding us up. United Rentals is our biggest performer today. And here's our total percent change on every stock. Luckily, we're green on every holding in here except for Carlyle Group. We're just slightly down on that company. Year to date, we're doing great. We're up 16%, a lot better than the whole April tariff stuff when we were down 14% year to date. We also have a Roth IRA. Our Roth IRA is pretty green on the day, plus 0.71%. Let's see, what's mainly causing that? Yeah, dang, Innodata down here is almost up 10% on the day. Weeble is green. I guess the only stock that's kind of down on the day is Cavco, that kind of interest rate sensitive one. So yeah, that's our Roth IRA. Hey, what up, Nostram? So here's our Weeble portfolio. It's kind of like our growthy account. All time, we're up 18% all time. So not the best performance, but still pretty good, up 18% all time. We have some winners and some losers in here. What's green on the day? Yeah, AMD's having a great day. AMD is up 6.86% on the day. Robinhood's up 4.9. Dave is up 3. SoFi's up 4. Futu's up 1. PSIX is up 5.5. So I really love the move that all these stocks are making. So yeah, hope y'all are having a great day. Let's see here. What's your opinion on Take-Two GTA stock? Hey, we'll check them out as well. Let me also go over my Moomoo portfolio right here. This is known as our buy never sell account. Yeah, if you look in the top left, it's called buy never sell. And luckily, every single stock is green on the day in here. So this portfolio is doing quite well compared to our other accounts. We're up plus 1.4% on the day, mainly from the Amphenol stock that we've been talking about. We were buying the dip on this company. This is the kind of stock that I just think is just going to continue to climb higher. That's why we bought the dip on them. Well, not exactly. We rose our cost basis, but I'm like, yo, for a quality name like this, I even think it's worth nibbling on at 129. And sure enough, it's up 5.5% today. So that's great for Amphenol stock. And yeah, so let me actually go over Take-Two really quick. What up, Plasma? What up, Tommy? Hope y'all are having a great day today. Yeah, Take-Two Interactive. So this is a pretty interesting gaming stock. And then I'll show you another game stock that I like more. Hey, what up, Nick and Muhan? What app do you use? Yeah, all these apps I'm using are in the link tree in my bio. They're all brokerages. But here's Take-Two. Yeah, it's the company that owns Rockstar Games, which, owns GTA 5 and Red Dead Redemption 2 and all those great games. But as you know, they're in a unique position because they have this game, this asset, GTA 6, that is not about to be released, but it's being priced into the stock right now that they're going to release this game called GTA 6 in next November, and it's going to bring them in literally billions of dollars of revenue. So looking at right now numbers, you wouldn't really do because you're really waiting for them to release that gangbuster game, which is supposed to be one of the top games of all time. So if you want exposure to GTA 6, this is the stock to do it. I will say it probably is priced into the stock. They don't make any money. The forward PE is a loss because they don't make any money right now, but it should be pretty interesting to see what happens. So you're basically if you're buying this stock, you got a diamond hand it for over a year and a half until the game's actually released. Maybe it'll do better than on increased outlook. Who knows? But yeah, I do think it's somewhat priced in. Hey, what up, Eric? What it do? Yes, sir. Yeah, great Friday. Happy Friday. Hope y'all are having a great week. I know next week we have a lot of like holiday days and half days and stuff, but I'm going to try to still stream all those days as well. All right. So one is stock that I think is a little bit of a better one. This is Tencent right here. What's their ticker symbol? I think it's TYCEY. It's a Chinese company, but this is an actual behemoth, dude. Oh, I'm spelling Tencent, bro. TYCEY. Tencent Games. Well, okay, it's TCEHY. Okay, anyway, this is an ADR Chinese company, but they own Riot Games, which owns Valorant, League of Legends. They also own Supercell, which is Clash of Clans, Clash Royale, Heyday, whatever. They own 49% of Epic Games, which owns Fortnite, obviously. They own PUBG Mobile. So this is a gaming behemoth, and they own a stake in a bunch of different companies. Like they own 10% of Reddit, 20% of Futu, 10% of Pinterest, and like so many other great stakes, or they have a stake in a bunch of different companies. This is an ETF in one, my favorite Chinese name. And if they were a US name, this would be a Mag 7. They would replace Tesla. So yeah, Tencent's a really cool one if you're looking for a Chinese name. I don't own them, but I think they pay dividend too. All right. CoreWeave, Micron, APLD popped today. Yeah, all of the data center adjacent stocks went up today. Look at Micron, just as we thought, an all-time high on Micron. So if I was a shareholder, would I be trimming my Micron shares? Absolutely not. The forward PE is a 7 over here on Micron. I mean, that's just ridiculous. This stock is just going to continue to climb higher, I bet. So, congrats if you own Micron. That's a crazy good one. I think the MU earnings made the market go up again after the Oracle disaster. Well, actually, yeah, one of the main movers today is Oracle because if we look at this, TikTok signs agreement for U.S. venture, so it's not exactly a divest of fully of TikTok because they're like keeping the algorithm, but the stock, it almost is like the executives needed some sort of news to pump Oracle. So yeah, Oracle's green 8% on the day, and we want them to be green because that sends everything else up, the whole entire AI ecosystem. So that's cool news about Oracle. They actually own less than 15% of TikTok when the deal goes through the US version, but it is a prize asset. How come you didn't show your other portfolio? Yeah, the video would have been way too long, Tommy. Yeah, that was pretty much why. Hey, what up, Robert? Hey, Nathan Robert. I'm Robert Vincent. Oh, no way. Well, what up, Nathan? Good to see you. What's your opinion on I don't know about all that. We're doing stock analysis. Oh my gosh, I actually just logged out of my account. You know what? Well, I guess I can pull up I got to relog into my, I can't believe I just logged out and I don't want to do this on screen. That's not good. I can just type it. Give me 1 second here. I can't believe I just did that. There's no way. Just give me 5 more seconds here. Bro, it texted me the code and I typed it in and it didn't work. Probably because I'm still screencasting. I don't even know what I clicked. How did I log out? I don't even know. Well, we're back. You know what? We got it working. Okay. Sorry. AutoZone. Hey, what up, Mel? Let's do AutoZone. Did you see the space sector today? Not really, no. Hey, what up, Free Me? It's the legend Kadu is in here. So, and Catherine's in here too. I'm still mad at myself for only buying 1 share of Micron. It's up 270%. Yo, we all have those feelings where we wish we bought more on certain stocks. One stock I actually want to get into is AutoZone. This is what I call a buyback monster because they buy back almost always like 5% of all the shares every single year. So if they paid a dividend, they'd have like a 5% dividend yield. But AutoZone, that's the main way they return money to the shareholder. That's why it's such a boring business, but they've had non-boring returns because of the share buybacks. Now, they are a bit off all-time highs, which is why it's starting to get interesting because the forward PE is a 21. So they're trading at 21 times next year's net income. I think that's very fair for AutoZone. If we go to their bottom line now, the sales are up 8%. The profits did fall, though. They fell 6%. So their margins are going down a bit. But check this out. They're easily making 600 million easily plus of after-tax net income a quarter. And since they don't pay a dividend or anything, they're just doing massive share buybacks. So the past 4 quarters, they're doing like a couple $100 million of buybacks a quarter. On top of that, we can see that they've actively been paying off debt as well, not net issuing debt. So that's good as well. So yeah, they just seem very shareholder friendly. You're not going to get a dividend, but they return money to the shareholder via those buybacks, which just makes the stock go up more and more. Hey, Dag, what up, man? Good luck to you, too. Yeah, happy Friday. The market closes in 30 minutes. Put that $7 into a Nokia share. Yeah, we got $7 of cash. And what up, Isaiah? So Jonas said American Express. You know who actually owns American Express? And another super boring stock that has just monster returns is Warren Buffett. It's actually his second largest holding. You're like, no, it's always talked about that Apple's his largest holding, but a sleepy performer has actually been American Express. It has grown to that size. Check this out. I mean, that actually, I think, does better than the S&P 500, and that doesn't even include the dividend that they give you. So yeah, American Express is also at a fair multiple. The forward PE is a 23. That's not exactly expensive. So that's why if I own this stock, I wouldn't trim it or sell it. This is the kind that's just going to continue to climb higher. Plus the 0.6% dividend yield, a 20% payout ratio. So yeah, very financial services business. But yeah, they're easily making 2 to 3 billion of after tax, or around 2.8 billion of net income a quarter. What are they doing with all that? Well, they pay a dividend. The dividend only cost 580 million net income a quarter. So since they have so much leftover money, they're doing massive buybacks. At the top here, easily 1 to 2 bill a quarter. Here's how you can also tell: the net income's up by 15, but the net income per share is up by over 18. So they've bought back 3% of the company, plus giving you a 0.6% dividend yield. So that's a great one. Fair valuation on them. And Warren Buffett owns them. So, hey, they're kind of backing you. What app is this? Oh, hey, what up, flopping? Hey, yeah, this is a brokerage right here. If you're looking to buy stocks, yeah, this is my favorite app. If you want to get this brokerage, it's in the link tree in my bio, very first link there. It's an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks. But you can just type it into Google, broker called Moomoo. Link tree in bio, first link there. The boring businesses are good for the portfolio. I agree. I own, hopefully I didn't show my phone number there now. But yeah, I own some boring ones like, did they own a bunch of gas stations? Murphy USA. Some of these are the Coca-Cola bottler. All they do is just bottle beverages for Coca-Cola and Monster and a little bit of Dr. Pepper, and they've just had market-crushing returns. So yeah, like self-storage is an industry that I love. I got McDonald's in here. So sometimes keeping it simple can give you just the best returns. Hey, what up, Caden? Good to see you, man. Thanks for that gift there. Eric and Caden, no way. Thanks for those roses. I appreciate that. Some AB said, can we look at Bull? Yeah, let's do Bull, okay? Thoughts on IREN? I bought it 86. Hey, maybe we'll get to Iris Energy too. That's one of the Bitcoin mining companies, or they're converting their Bitcoin. 85% of the revenue still comes from that, but remind me to get to them. But I don't love them because they nothing really proprietary there. But here's my Roth IRA. In our Roth IRA, we actually own Weeble. They are green on the day, up 2.5%. We're still down all time. We're down 4.8%. Actually, after this, we'll get to BITO. Yes, sir, Caden. Yeah, we're down 5%. Weeble's still expensive. Even though they're down like 50% year to date, they're still expensive, like 70 times next year's net income. They're barely just now getting net income positive, but they're not cheap even after on the dip. But I'm more bullish than the analysts are on Bull. And what is Weeble right here? That's actually this platform right here, this brokerage. If you look at the very top of my screen, it's called Weeble. So I've been using their platform for many, many years. And why I'm more bullish than the analysts are is because they're getting into this prediction market stuff into crypto. See how it says new next to it, and the advisory and the subscription stuff. So that's what I think is going to make this platform a lot of money. So hey, that's the picks and shovels play of crypto and this prediction market stuff. They're copying Robinhood's successful business model. I love the whole industry. So I own Robinhood, I own SoFi, I own Futu, which is Moomoo, I own Dave. I got a lot of fintechs. So that's an industry I'm bullish on because the tokenization of assets and these prediction market contracts and crypto, there's so much money to be made from the brokerages. So that's what I'm betting on, like Weeble. So let's do BITO real quick. And Robinhood. I also own Robinhood and I own Moomoo. I own all these brokerages right here. Their stocks, as well as use their platform. So yeah, the BITO ETF, this is a Bitcoin covered call ETF. As we can see over this, we have the actual price of Bitcoin, and then there's the BITO ETF. At the top, it's just called ProShares Bitcoin ETF. That's kind of a misleading because this is a income ETF. If you look at the dividend yield, it's a 75% dividend. You basically buy this to maximize your income. You're not expecting to outperform Bitcoin or really the S&P. You just want to maximize your income with that. So that's just like a ETF that sells calls on Bitcoin, and that's an asset where you get a lot of premiums for. So that's why the yield's so high. AXP or Visa? Ooh, at this current price, I'd probably pick Visa if I just had to pick one. Hey, Brian Paul, shout out the member. No way. Good to see you, man. Thoughts on MYNZ? I'm so behind. Sorry if I'm missing any stocks here because I want to get to Iris Energy too. Oh yeah. Ooh, UPS, given FedEx earnings report was amazing. Yeah, we'll check that out, actually. I heard like FedEx had great numbers, but the stock still fell. So here's Maine's Biomed. Be very careful with this stock. Here's why I don't normally cover these. If you look in the very top right, the market cap, this says 10.7 million. That's how much the whole company's worth. So this whole entire company is worth $10 million. They're at an all-time low. They're a penny stock. These are always the ones I completely avoid. Genetic diagnostic testing. Do they have revenue? Well, here's the bad news. Just think logically here. The whole company's worth, 10 million and they just lost 5 mil. But looks like, yeah, that's not even, these are old numbers. So yeah, I wouldn't touch that one there. That one just looks really risky there just because the market cap's so tiny. So let's actually check out UP. Oh, wait. let me get to Iris Energy right here because I think still 85% of this company's revenue comes from Bitcoin mining, but they basically there's nothing really proprietary here. They own a bunch of GPUs in a data center, and they're slowly converting those chips to Bitcoin mining from cloud server hosting. And they're getting crazy deals. Like, check this out. Iris Energy secures $10 billion Microsoft AI cloud deal and expands their GPU infrastructure. Again, there's nothing in the long run. They are the bag holders buying these kind of super overvalued chips. You know, the whole depreciation curve in like 20, 15 years, they're absolutely worth nothing. But they're going to do great for probably the next 2 years look at their projections. The revenue this quarter is 188 million. It's supposed to go to 285 million. So there's just like the top line growth is nuts. It's from these massive deals that they're getting because Microsoft doesn't want to take on that liability. They basically are renting out the capacity from Iris Energy because it's cheaper, and it's kind of the smart thing for Microsoft to do. But they also don't mind it because this company was kind of in the toilet from Bitcoin mining, but now they can convert that. But there's no forward PE here. Since their current PE is at 23, they had a total funny money one-time adjustment. Yeah, like this quarter, if we go to their net income, it says they made 384 mil. They actually lost 60 mil, which I don't know. I'd just be careful with this name. Nothing really blowing me away here. But they're doing great on the day. They're kind of like an NVIDIA, high beta NVIDIA, the same. It's basically a smaller core weave. That's exactly what that is. It's a smaller core weave. But they're going to do, I think, good for the next 2 years. Yeah, wait, was CoreWeave really up 23% today? No way. CRWV, CoreWeave. Wow, up 22% on the day. You know, another company that just owns a bunch of GPUs and a data center. So that's great news. You know, that's sending up the whole ecosystem up. That's sending up Amphenol like crazy. Amphenol's up 5.5% on the day. That's crazy. Hey, what up, Meek? Good to see you. So, hey, I'm sorry if I'm being an extra little bearish today. I'm not trying to. Let's check out UPS right here. This is another one that I don't love, but this is like another dividend play. So FedEx came out with earnings this morning. Let's see. UPS owned Happy Returns develops AI tool to combat return fraud. Hey, that's good. Less than 1% of returns are flagged as high probability of fraud. Well, anyway, that's kind of cool. What's the forward multiple on UPS? So UPS trades at a 14.8 forward PE. So they are expected to grow their EPS, which is good news. Let's actually see. We can see that right here. Their average daily parcel volume went from it's currently 19.4 when it was 21.5. But their average revenue per parcel is up though. It's 1482, probably from the tariff stuff. Like my brother was ordering a bunch of stuff from UPS and he had to like pay tariffs on the stuff like unexpectedly. But so if we go to the revenue, this isn't really what you want to see. The revenue's down 3.7% year over year. The net income's down by 15, and it really is. So they have a really high payout ratio, and it kind of suffocates them because if we go to the dividend, this company has a 6.5% dividend yield, and they made this quarter 1.31 billion. So they made 1.31 billion, and the dividend cost 1.35 billion. So for me to really be comfortable, I want to see them make a lot more than 1.35 billion in net income a quarter because for the past 3 quarters, they haven't made that. What about in free cash flow? So not in it's a tough one. Yeah, they had a big beat. They expected 128. They did 150. I wonder if FedEx is also rising from like tariff, like average parcel price went up. And they raise outlook. See, I like FedEx more because they have a low payout ratio. They have a lower yield, a 2% dividend, but a much lower payout ratio. But honestly, the best way, if you love this industry, the best way, if you don't care about a dividend, the best way to get exposure to that is actually Amazon. You know, Amazon's kind of the one that's going to end it's been such a detrimental to their business. And Amazon can out innovate them because they have a really high dividend payout ratio. And anywho, it's interesting though. Charge your phone. Hey, what up, YouTube agent? You're right. Does the Buffett effect work in reverse? You know, actually, he's actually Warren Buffett. I don't know. I doubt if it was actually him, but the Berkshire Hathaway bought like 5% of Ulta Beauty in one quarter, like down here, and then the next quarter they completely sold out of it. Like they bought it this quarter and then they sold it the very next quarter. But now the stock is at an all-time high. This beauty stock has done very well. It's because mainly from the share buybacks. It's incredible the share buybacks Ulta Beauty does. My favorite beauty name, even over Elf Beauty. And Tommy says Iron Mountain. Let's check this one out. This is a REIT right here. If you're looking for a REIT with a bit of a higher yield, this is one that I really like. They have a 4% dividend yield because they just rose their dividend. But one thing really hurting on this stock was a short report thesis that came out about them, but it doesn't bother me at all. Because I'm waiting for the actual numbers. That's what I'm waiting for. So gives me a chance to buy the dip on them, and I did. So yeah, we can see right here their global data center business is growing very nicely. It's up 33%. First ever quarter, that's just over 200 million. For a REIT, that's very impressive. Same with their kind of corporate and other. It's up 50% year over year. So for these REITs, you really do a dividend payout ratio based off the core FFO. But yeah, they have I like them because they have a rule where they keep their dividend payout ratio in the mid 60%. So that's what I like about them. That's a data center REIT, a real estate investment trust. They own basically triple net leases under the data centers. Yeah, we all cooking. What's up, Plasma? Yeah. CoreWeave, all the AI trades, Oracle, Nvidia's green. I think AMD was really green too. Yeah, check that out. We're up 6.85% on the day from AMD. Robinhood's green. SoFi, Dave. What's down on the day? Clear Secure, our regulated utility. Disney's down a bit. So, but overall, we're net green. We're up 1.36%. The market closes in 15 minutes, so don't go anywhere in 15 minutes. I'll kind of do a whole portfolio update. But let's look at some more stocks here. Yeah, Luffy, yes, sir. Oracle is finally going up. Okay. So glad I bought MU a couple weeks ago. Absolutely, Chris. BC. In MU, if I had a share, I would not be selling my shares either in Micron. That's a great one to hold for the long run. I mean, great fundamentals. Uber, let's pull up Uber right here. A great quality company at a good valuation. Kind of the Buffett approach. You want to buy a quality company at a fair price over a fair company at a great price, or whatever it says. Anyway, Uber's one that's really been tanking ever since Waymo announced they're raising money at a $100 billion valuation. And, that's basically more than half of Uber. Uber's worth $164 billion, and Waymo on like less than 1/10 of the revenues is going to be worth half of that, which is crazy. But this is the best part about Uber, the fair valuation. I think it's they're selling this off too much. The forward multiple is a 23.4, so they're trading at 23 times next year's net income. We can see they're not just active users, but monthly active consumers is at 189 million versus 161 million. So the amount of monthly active people on the platform's going up. We can see the delivery, which is Uber Eats and other like parts delivery, that's up 29%. After grew 18, after grew 6, like the growth rate's growing here because they're expanding it more from just Uber Eats. The mobility revenues up 19. Also at a record, like everything here, the numbers are all great. That's why I can't complain. The free cash flow, that's what FCF stands for. Well over $2 billion of free cash flow a quarter. Green growth rates year over year. They didn't actually make $6 billion this quarter, but they did make $1 billion. It was a record Q3. Everything here, nothing's bothering me. Everything here is headed in the right direction. The valuation's good. The forward PE is good. It's like their earnings before interest. I wonder if we can get a little AI summary on this one. Nah, not really. But they have a big stake in a bunch of companies too. Like they own a big stake in Grab, and that's another company I do like. Not bullish enough on QNCCF. I looked that stock up. Unfortunately, I typed in that ticker symbol. I looked for you. I could not find that one, sadly. And I did look. My voice cracking. What website is this? Yeah, hey, this is actually a brokerage where you buy stocks on. If you wanted to get this broker, it's in the link tree in my bio, very first link there. Hey, and it is affiliate link, so if you go and like deposit $100, we'll both get like some free stocks. But yeah, free brokerage, costs nothing, no fees. Okay, Nike. This is so sad. This consumer discretionary names. Honestly, it's not even the whole consumer discretionary sector. It's just Nike today because they had really bad earnings. Well, anyway, I used to be a shareholder in Nike. I love them, but I still love the brand. I have like a collection, but I had to remove my emotional attachment and sell out of them. Hey, yo, try not to spam there. Yo, we'll maybe get to XRP. That's a crypto. But yeah, Nike right here. I did sell all my shares at $78 because I didn't like the direction the financials were headed. But let's go see what they reported. So they beat on revenue, they beat on EPS, and they beat on EBITDA by over 20%. and the stock's down 11. So that's not good. Let's see if we can figure out what exactly happened here. Nike reports Q2 revenue growth amid margin pressures and China weakness. While Greater China revenue declined 17%, gross margins fell 40% due to tariffs and inventory issues. That doesn't sound good. That might be maybe this isn't the exact quarter. Anyway, wait, Q2. Yeah, this might be the quarter. I don't know, but yeah. Anyway, assuming not, look at this. The revenue grew 0.5%, so the revenue's up slightly, not inflation beating. Like, look at this, all the losing to inflation, but the revenue's up 0.5. But the bottom line, the net income is down by 32. So yeah, look, so when the revenue's up slightly and the actual profits are down by 32, that is just collapsing margins. Net margins down by 30, gross margins are down by 7. Like, look at the margin decline the past 4 quarters. So this is not really what you want to see, and it's hurting them as well because they have a dividend too. So look at this. They can afford the dividend. I think it costs like 500 mil, but they made 790 million this quarter. So they made 790 mil, and the dividend cost, where is it? 590 mil. So the dividend costs 590 million. So as long as they're making over 590 million a quarter, the dividend's safe, but that doesn't leave them too much left over. It's a tough one to be in this environment, because most of their stuff is made in like Vietnam, like their shoes. And well, it's a tough one. I don't know if I'd buy the dip on them either. I'm not going to, but it's rough. Hey, Mada, what's up? Thanks for joining earlier. It was on the Discord. So what is a fair price for core even APLD? I have no idea. What does PE ratio mean? The PE ratio is the price to net income plus any share buybacks or dilution. That's what the PE ratio is, because it's the price to EPS, and EPS is just net income per share, which is just net income plus any share buybacks or dilution. So there's the whole formula reverse engineered for you. And Carlos, happy Friday. Yes, sir. Don't you think Uber might get negative impact from all the increase in gig work? Could be. Which platform's using? Yeah, and the robotaxi stuff. Yeah, hey, COD, if you're on the YouTube stream, and I see you are, this brokerage I'm on right now is actually in the link in the description. If you're on the TikTok stream, it's in the link tree in my bio. All these apps are. They're all actually brokerages where you buy stocks on. So they all ask for a bunch of information. If you were looking for an app to buy stocks on, my favorite one is Moomoo. It's the very first link in the link tree in my bio. Costs absolutely nothing, no fees, and you get the idle on your cash 3.35% APY, like on Robinhood over here. It's another free brokerage, but for you to get a lot of these features, you have to pay them $5 a month. Like to get the lower yield, 3.25% APY on your cash, you got to pay them $5 a month. But not with this one, no fees. Anyway, link tree in bio, first link there for. Okay, what up, Nick? And how can I learn about investing? Hey, actually, that's the only. I don't sell anything. I have no course, book. I do have that affiliate link, but I don't coach, nothing. The only way to learn from me is just watch the YouTube videos and watch the streams. So, hey, Jay Shelton, good to see you. So what's up? And Skedding, good to see y'all. Innodata's up 10% on the day. Yeah, this one still might be a slight bit expensive. It's one of my favorite growth names right here. It's kind of the picks and shovels play for data, these LLMs training with data. Innodata is a data labeling company. Their largest customers is Google and Meta. Actually, Google, Meta, NVIDIA, Microsoft, and Amazon are all customers of this stock right here. They've had a pretty monster stock price appreciation. They are expensive, a 47 forward PE, but this is the kind of stock that deserves a high multiple. Look at the expectations. First off, that's the orange line here. They always beat on expectations. They beat on revenue. They beat on EPS by double, basically, and they beat on EBITDA by double. The earnings before interest beat by double. So look at this. Not only did they beat this quarter on revenue, but check out what's it's expected to be next quarter. 69 million, then 79 or 72 million. So these year-over-year comps this is just a pure growth name. I do own them. But this is the kind of stock that I recommend you have as a very small size position. I have a lot of those kind of stocks where I love them, but I don't really want them as big, meaningful size positions. Yeah, we do got 9 shares of Innodata. This position's small. See, it's worth $470. I actually just took over Weeble, so let me actually move Innodata above Weeble down here. They're our smallest holding. I love Weeble too, but they're expensive, so I don't have them as a meaningful size yet. I would love to make Weeble a bigger size position at the right price. Look at Nebius and their AV ride. Ooh, how do I check their ARV ride ARV ride? I don't. Ooh, Symbotic too. Yo, flip. Actually, oh my goodness, I don't know what I just clicked there. Symbiotic. Let me go over this one real quick, and then we'll pull up Nebius. Or is it? Do I have to like go to their website or that, or maybe we'll just look at the news tab? Hey, good time. What's up, dude? So here's Symbotic. This is a warehouse robotics company, mainly helping out Walmart with their warehouse logistics, saving Walmart a bunch of money. They have over 1,500 registered IP and patents and trade secrets. And if we go to the largest shareholder here, this is what I love specifically. Like Walmart is the most incentivized to see them do good. I mean, right behind SoftBank, but Walmart's their largest customer, and Walmart's also their second largest shareholder. So their interests are really aligned here. They have real revenue, like I've seen a lot of the other robotics names, like a Serve Robotics, a Rich Tech Robotics, not literally no revenue. It's their startup, or Serve Robotics is better. But Symbiotic right here, this is the best, right behind Amazon. Amazon's your number one robotics play, then Symbiotic right here. They print money, 500 mil revenue a quarter. They're barely losing any money. I mean, 20 mil in net income a quarter. They can easily afford that. They did just issue some shares though. One of the reasons they fell, they hit an all-time high. They hit $83, and then the day they did, they said, okay, we're going to dilute the shareholder by $1.5 billion. It was genius for them because the forward PE is 100. Like they are expensive up there. So I put them on the watch list. If you're looking for like a real robotics name, that's your real robotics name. Don't buy Rich Tech. Don't buy these other ones. Buy Symbiotic, and I'd of course buy Amazon first. And I do own Amazon, but yeah, because these are the companies that are the most to benefit. The companies that use the warehouses, which is Walmart, logistics hubs, Amazon. So that's where they save on human labor. Okay. Let's see here. There's some good picks here. Let me pick one. Oh, wait. Nick, or what was that? Okay. I'm so behind here. I do apologize. We'll try and get to all this. You know who actually owns Nebius? That's actually an NVIDIA stock. So NVIDIA does own a lot of these companies. You know, CoreWeave, APLD, Nebius. NVIDIA, 5% of their portfolios in Nebius. NVIDIA is taking a stake into these stocks and giving these companies money. And with that money, they're literally spending it all on NVIDIA chips back to them. So there's a bit of this circular kind of momentum thing right now. In the long run, let's check out this news here. Nebius unveils AI Cloud 3.1 and NVIDIA Blackwell Ultra hardware and advanced features. So yeah, basically this company owns a bunch of, NVIDIA Blackwell chips in data centers, and these data centers and the GPUs are in such demand from cloud hosting, and Microsoft give them a $17 billion deal. Let's see, revenue growth was driven by AI infrastructure demand and significant partnerships with Meta. So basically the top line growth is nuts. If we go to the year-over-year comps, it's all triple digit every quarter. Revenue went from 32 mil to 150 million this quarter. And this was a record. 150 million was a record, but check out what analysts are expecting in 2 quarters. 469 million. And right now they are losing, over 100 mil a quarter, but those losses are expected to narrow as the top line grows. So they're only going to lose 66 million. Jim Cramer is short this one for the, there's the whole depreciation curve where they're buying these super overvalued NVIDIA chips. But if Jim Cramer's shorting it, maybe that makes this one a good buy. And I do think this one will probably be a winner for the next 2 years. It's kind of like a higher beta NVIDIA. The better picks and shovels play would be NVIDIA, the money, the company that is given all their money to. Okay. Let's see. How do you like RY? What is RY? Let's check this one out. Is that RY stock? Buy Toast here. Actually, let me check out Toast too. Royal Bank of Canada. Check this out. This has been another boring name. And hey, Mark, no way. Shout out to Mark, dude, with the 3 cats and the 3 lightning bolts. Thanks for those gifts there. I do appreciate that, Mark. But Royal Bank of Canada is just a boring Canadian bank, just a bank. And look at this stock price. It's an all-time high today. So congrats if you've ever bought this one. You're for sure up on your money. And not just, you've gotten the stock price appreciation, but a high yield as well. Even if you bought this stock right now, you're getting a 2.6% dividend yield. They raise the dividend every year faster than inflation. So they're in wealth management. That's where the juice of a money's made, where they look at the annual growth on their wealth management business. So, investing stocks and index funds for people. And then they're also in personal banking, of course, capital markets. So it's more, they're in insurance as well. So it's more than just like a like a bank, wealth management services. That's where they make a lot of fees. And so if you go to their bottom line net income, wow. So they are in Canada, so they do report slightly weird. So we're actually, oh wait, let's convert the currency first off to USD. So it's right now in Canadian currency. We'll just convert it to USD, get a slight better idea. But look at the bottom line. This is their after-tax money. They're easily making 3.5 to 4 billion of net income a quarter. And these year-over-year growth rates are phenomenal. So I can totally see why this stock's at an all-time high. The forward PE is a 15, so this probably will, I mean, that's a slight bit expensive for a bank. Banks usually trade at like 14, 13 on the high end, like a JP Morgan, I think is at like a 15. All right. So I can't really cover this sector right here, but DKNG, we'll call it a gaming stock, is kind of being out innovated. You know who's the better version of this? Like this right here, that book, who's kind of out innovating them right now and honestly a better play? Well, first off, I like Weeble too, but like Robinhood right here. All these fintechs apps are basically adding it all into their app right here. Like anything you can do on that platform, you can most likely do on Robinhood. So there's a lot. Whoa, Google just rocketed up. The market closes in 2 minutes here. I wonder, wait in 2 minutes. We'll do a portfolio update. Looks like Meta tank. Look at that. It's kind of like an inverse here. Did like Google just steal Meta's market cap or something? Oh, maybe a TPU deal. If I had to take a random freaking guess, Meta's paying a bunch of money for Google TPUs, and I have no idea though. But anyway, this one's tough because they don't make any money either. So would I buy DKNG? I don't love them. And do they have a forward PE? A forward PE is a 69. That's the same as a Weeble. Honestly, I'd rather own Weeble, sadly, or even or Futu. Actually, the most I'd pick Futu. Hopefully that was kind of helpful. I didn't have too much good news to say about them, sadly. But we want to see them get profitable. I know they have good top line growth. Does betting on Hood affect your stock portfolio performance? Yeah. Or I think you mean on Robinhood, the platform, not on Robinhood, the stock. Yeah, it mixes in with your return up here. Market closes in less than 60 seconds. Looks like is a slight little rotation down. Let me actually check out the cues real quick. Maybe I'm wrong there. Maybe it's dude, my Wi-Fi just loves me today. Come on, Qs. There we go. Actually, we're pretty much at a new intraday high. Happy Friday. It was an overall really good Friday. So should I sell my Rich Tech Robotics stock? Probably. It's this. Well, here's the thing. Rich Tech Robotics, they have robotics in the name, but this isn't like at all a robotics play. This is a momentum stock, something you swing trade. This isn't like a robotics play because they don't have any robotics products. They have no revenue really. Like this isn't the best. If you're looking for the best play for robotics, this is not a good one at all. They have one little crappy marketing NVIDIA partnership that's not even real, but they do $1 million of revenue a quarter, and the revenue's down 18% year over year. They lose money every quarter, but that's not to say there's still money to be made. Like tomorrow, there could be some random news and this stock will momentum up higher 15%. So you want to try and get out of this one or dollar cost average out on this one on rallies. So now, and I'm not a fan of, I'm never good at timing and swing trading. I'm just a fan of diamond handing great quality companies. And for a great robotics name, I'd first off, like, if you like Rich Tech Robotics, you'd love a Symbotic. They're also kind of on a dip right now. They have over 1,500 registered IP and patents purely for robotics networks. And they help out Walmart with their robotics, and Amazon has their own in-house robotics. And like these are the companies that benefit from robotics to replace humans. So let's see. Yeah, I said S&PS Synopsis. Let's check that one out. S&PS. What do you do for work? I'm a college student. Hey, definitely don't listen to me. I'm not an expert. Used to work at McDonald's, but I quit. So here's synopsis right here. Now I'm a shareholder of McDonald's because I love them. So anyway, here's synopsis right here. I don't remember what this company does, but the forward multiple is 163. So it is a high. So it must have maybe been on this earnings day. They must have reported some bad guidance. Let's go see what their most recent earnings report was, because I guess that's what really matters, and that's what we should be looking at. So design automation, so another kind of maybe robotics name. This is good growth. The revenue's up 23%, after grew 6%, after grew 23. So that's a record revenue there. What about their other business? Their design intellectual property looks like that did fall 7% year over year. But when we combine the two businesses, the revenue grew 37. That's great. Did they do an acquisition? Let's see. Whoa. Okay. Wow. So they spent $16 billion buying something. Yeah, and they had to dilute you by $10 billion to do it, or actually by $15 billion to buy the $16 billion asset. Now that I do wonder what they bought. It was exactly this quarter. The day they announced that $16 billion acquisition, it was exactly 2 quarters ago, because that's exactly when this was. So they bought something. So I bet the top line growth is going to be great just from the acquisition, because they bought such a hefty asset. Anyway, looks like they're going through a transition that might be artificially hurting their forward PE from losses from the acquisition. Who knows? I wish I'd give you more thoughts on this one, but hopefully that was somewhat helpful there. Okay. Yeah, I charted Richard Robotics. Looks good, but the fundamentals look bad. Yeah, hey, from a technical play, they could be a good little swing trade, but yeah. Amazon is up 2% in the last year. Is it a dead money stock until 2027, in your opinion? Well, the stock could be flat, who knows? But this is the thing. Like, this is what I like. The fundamentals have only gone up and to the right. And honestly, before this, like they've been super overvalued right here, but they're finally fairly valued at a 29 forward PE. This stock, look, if we go on the weekly, it's not much higher than its peak in 2021. Again, I don't think y'all realize how overhyped this was during 2020 COVID. They had such a rapid rally up because they thought, oh my gosh, everyone's going to be at home after COVID. They're all going to use Amazon. And Amazon was the most overvalued stock ever. But anyway, it's now back to reality. Like they print money, and the profits have only been up and to the right. This is what I currently see. A business that made 21 bill in net income, up from 15 bill, up from 10 bill, up from 300 mil. Like, look at this. Back then it was a tough buy because they weren't making consistent net income. Like in 2022, this is what the business was doing. Such bad numbers. But now, like, the business is in the best spot they've ever been in. They're making 20 bill in net income a quarter. They're investing like crazy into the future. It's an ETF in one. This is a cloud play. Their AWS, Amazon Web Services, is the #1 market share for cloud, even higher than Microsoft Azure and Oracle and Google Cloud. They are the #1 market share. It's over 100 billion of annual revenue for them, brings the most of the bottom line. E-commerce play, subscription play, advertising play, real estate play. It's like a UPS, a Walmart, an Oracle, an Instacart, all in one. It's a robotics play. It's an AI play with Perplexity, and there's just a drone play. This is one I wouldn't want to bet against. It's one I just want to slowly accumulate more and more shares of. And every time I see Amazon on a dip, I buy more, because they're such a great one, I think, to never sell. One day they'll pay a dividend. I like that they don't pay a dividend. Oh yeah, hey, I'm missing so many stocks. I got a bunch of RY waiting for me in a trust, so I'm glad. That's awesome. Yeah, McDonald's employee secret. Oh, Nathan said, what app are you using? Yeah, hey, if you want to get this app, this is a brokerage where you buy stocks on. It's in the link tree in my bio, very first link. Full disclosure, it is an affiliate link, so if you go and actually deposit $100, we'll both get like some free stocks. Yeah, my favorite platform to not only buy stocks on, but also analyze a company, because you can buy a stock on any platform, but this one, and it's free, costs nothing, lowest fees, nothing at all, and you can analyze stocks really good. Can you look at APLD? Applied Digital. Yeah, speaking of Applied Digital, you know who owns Applied Digital is NVIDIA. So if we go to the NVIDIA portfolio, CoreWeave, APLD, Nebius, they're all kind of the same thing. Wow, yeah, so APLD is up 16% on the day. It's like an NVIDIA adjacent play. Whenever NVIDIA is doing good, this one's doing great. Secures a $100 million loan. So basically this company owns a bunch of GPUs in a data center. Let's see. So data center hosting business, and then their high performance hosting business as well. So they are, I think they used to mine Bitcoin, but now they're using it for this. So they had a great earnings report. This quarter they expected 45 mil of revenue, analysts did, and they reported 64 mil. So initially that's why they gapped up on earnings, but then fell because the whole AI trade. But yeah, this one's kind of like an NVIDIA proxy, high beta NVIDIA. Same with like CoreWeave too. It's a smaller CoreWeave. Yo, stocks and sports. What up, dude? I do enjoy talking to you. Our trading styles are so different. Yeah, hey, that's what you want to get different perspective, hopefully I can offer some sort of unique financial perspective. So, let's we'll get to Toast after this. I wanted to get to Reddit real quick. So yeah, TikTok, or let's check out Reddit right here. A lot of people think Reddit is like a meme company, some meme stock, but this company actually has great financials and it deserves to be doing this well, I think. And the numbers explain why. They're super expensive though. Not a stock I'd buy at current valuations at a 31 forward PE. It's just, definitely expensive at over $200 a share. So I wouldn't buy it here, but I can see why they're doing so well because analysts didn't expect this, and I didn't expect this. The revenue's up 67%. Last quarter was up 77, 61, 77. Like, they have incredible top line growth. They're going to be doing over like $2 billion a year. Their growth, it takes nothing to run Reddit. They have 91% gross margins. It's crazy. Their ARPU, their average revenue per user is up 48% year over year. So they're making 48% more money per user. In the space, like if you ever run Reddit ads, you know that like the impression per milli or per cent or whatever is way better on Reddit than any other platform. And you get a higher return on your ads on Reddit than anywhere else. And that because they just started this and it's an early adoption. But anyway, they're printing money. They really are printing that income. The year over year comps are incredible, triple digit growth. They have a fortress balance sheet, literally no debt, completely debt free stock. That just is a huge safety net, takes a lot of risk off the table. I want to pull up their cash on hand as well. They have over $2 billion of cash, but the balance sheet doesn't want to load. There we go. So yeah, they have $2.23 billion of cash because all this free cash flow, they don't pay a dividend. They don't owe anyone any money. They have no debt. So anytime they make free cash flow, like they did 183 mil this quarter, they just keep it all and retain it. And it goes to their cash pile. So anyway, Reddit's a cool one. There are a lot of the recent revenue has come from as well LLM data training. Like OpenAI is using Reddit's data to train their LLM, and OpenAI gives Reddit basically 100% money, like free money for that data. Okay, Warner Bros. What app is this? Oh yeah, hey, this is actually a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. I love this broker called Moomoo. You can just type it into Google, broker called Moomoo. But if you want to use my affiliate link, link tree in bio, first link there. Let's see, Warner. Oh, there was another stock I wanted to look at, but I forgot what it was. Rivian pumped retail sorts. Yeah, Rivian's another one with not too great financials, unfortunately. Toast. Let's do Toast right here. This is a restaurant, basically point of sales software company. And one of the reasons the stock is, being hurt from all-time highs is because a lot of restaurants are struggling right now. So if you like basic example of that is Wendy's, like Wendy's stock right now. This isn't great. Wendy's is pretty much at an all-time low. Wendy's is a lower valuation than they were in 1997. In 1997, Wendy's was $14. Now it's $8 today. So RIP Wendy's. But Toast is the point of sales system company. Actually, I wonder if I could pull up their website where is it going to show? Yeah, so like these little devices right here, like credit card scanners, when you pay and stuff. I wonder if there's more pictures of it. So yeah, I guess here's some places that are already using it. Anyway, here's a cool thing with Toast. Those are those little machines that are like, hey, would you like to leave a 40, an 80, or a 1,000% tip? So that's this company. With Toast, the average check size is up by 15%, which that's an extra 127,000 per year when we're at full capacity. Anyway. Let's go look at their numbers because I love their numbers. They're beating on every expectation every quarter. This quarter, they beat on revenue, they beat on EPS, they beat on EBITDA. Everything here's headed in the right direction. Now, they're at an expensive forward PE. Let's see what it is. A 51 forward PE, but they really just got net income positive. And at this basically triple digit growth rate, they deserve a 51 forward PE. Because like the same time last year, they were losing 20, 30 mil a quarter, but now they're going to be making 100 mil a quarter. Same with the free cash flow is nuts as well. So deleveraging their balance sheet, assets are growing, liabilities are shrinking. So pretty cool Toast. Hey, Killer Kenny, what up? Yeah, hey, again, sorry. If you want to get this app I'm on, it's actually an app where you buy stocks on a brokerage. It's in the link tree in my bio, very first link there if you want to use my affiliate link. Broker called Moomoo. Let's see. How many Oh, hey, Oracle. Let's do Oracle right here. Yeah, Oracle. We already did this one because this was the big news of the day. Sorry if I'll be so quick about this one. But Oracle's, yeah, they bought TikTok. Or actually, I don't know why I just said that because that wasn't true. They they got like 15% of TikTok US. So 15% of TikTok US is now owned by Oracle, and there's still a lot of stuff around it because Oracle doesn't get the algorithm part of it, but they're storing all the data and stuff on Oracle. Anyway, so yeah, Oracle will hold a 15% stake and store the US user data in its cloud infrastructure. So 15% stake, that's still pretty big, for a prize asset like them. But yeah, that's really what pumped up Oracle. Oh, wow, it did fade a little bit at the end of the day, but yeah, Oracle went up 6.63. It kind of sent up the whole ecosystem. But one of the reasons Oracle has been done so bad is because of their debt concerns. Like they basically have to raise like 60 billion more of debt to get the 100 billion or 200 billion rest of the obligations from OpenAI. And it's just like, you got to spend so much to get so much. And it's just Oracle secures 150 billion in data center lease commitments. So they have the commitments, but and there's like slowing downs of data centers, and there's just a lot of noise around Oracle, and they're just a cloud play. And my favorite cloud play would actually be AWS, which has a higher market share. Oracle has around a 6-7% market share. Then slightly higher than that is Google Cloud, then Microsoft Azure, then it's AWS. So my cloud exposure is just via Amazon, which has a lower multiple, 29 forward PE. Google's lower. So Oracle's like the most expensive, but it's like the pure cloud play. Ooh, Warner Bro. Hey, yeah, there's not any more news to really cover. Oh, what's the ticker symbol for Warner Bros? WBD. Yeah, they're basically getting acquired by either by Disney pretty much. And the valuation does look pretty capped. I think the um Paramount defends 108 billion. Warner Bros. Criticizes Netflix deal. Well, their deal, like they can drop out of it, and it's not backed by one of the sovereign funds, and they have the ability to withdraw. So Netflix, like Warner Bros. Is like, we're going to take Netflix's. And there's just so much shenanigans around this one. But anyway, the reason the stock has done so well is because they're getting acquired by either Netflix or Warner Bros. And the bidding keeps on going up. That's kind of the thing. It was like originally at this price, but then the bidding war happened when Paramount Skydance up the bid, and so who knows? There's probably the upside would maybe be going from 27 back to 32, or I don't know. So it's kind of like a scalp play. Okay, let's see this one. What about Broadcom? It bumped down. The multiple's not looking too bad right now. This is a high growth play. I love this one. Ooh, what up, Vish? We'll look at Zscaler, and I just bought SE. We'll check these out too. And Shark Ninja. Oh, no way. Forgot about Shark Ninja. Hey, Lulu. Yeah, remind me to get to Shark Ninja and TNDM and some of these other names. So here's Broadcom. They're doubling down on their TPUs. Oh yeah, look at the top here. Broadcom shifts focus to AI custom chips. So they are expensive. Even though they're have fallen like 20% the past week, they're still at a 41 forward PE. So that's an expensive forward PE, but this is the kind of company that deserves a high multiple, and it'll really never get to like a multiple where you're happy with. So yeah, a lot of people know them for their semiconductor solutions, which just has phenomenal growth. We can see, let's see in the most recent quarter, it was 11 billion. That's actually the first time ever this business is over 10 billion, and it did 11 billion, 35% growth year over year, like continuing that the growth. So a lot of people know them for their semiconductor solutions. Another main growth driver is their infrastructure software, which is VMware. Check out the growth. Like in 2023, this was 7.6. This is in fiscal year, but fiscal year 2024 was 21, and then 27. Like incredible growth rates. So great pure growth name. They print money. This is their free cash flow. So not just operating cash flow. The free cash flow here is 6 to 7 billion a quarter. 6 to 7. But yeah, they're printing free cash flow and net income. They're making 5 to 6 billion net income a quarter as well. So it's a great chip play to diamond hand. They also have a nice yield. I'd love to get it at a slightly cheaper valuation, but it might not go to that. It's kind of at, Broadcom's where it was when it reported earnings in September 2020. 5. Okay. Great quality name. One I'd happy to just hold. So what is this one real quick? Zscaler. So yeah, this is a cybersecurity name right here. They're not profitable yet. That's the one thing I don't love about Zscaler. Let's see if there's any AI coverage on this one. No. Let's see. Is there anything down here? Not no, there's no news covering this one. Anyway, I love the growth on this one. If we kind of click up here, look at the revenue. It's up 25%, after grew 26%, after grew 39%, after grew 62. So they're just continuing this streak of growth. Just hits a new record every year, every quarter, but they can't get profitable. They're barely losing any money. That's actually no big deal at all. They're losing like 10 mil a quarter. And for the market cap, I think they have like a 20 bill market cap or what, 37 bill market cap. Yeah, that's nothing. The free cash was really good. They made 400 mil of free cash flow, but their stock-based comp, since their GAAP net income negative, but looks like they bought a company for $1.5 billion this quarter. That's really interesting. That might lead you to even more, top line growth, even though inorganic growth, but still growth nonetheless. And yeah, the revenue is just, expectations are up and to the right, and they always beat on revenue. So yeah, it's like a cybersecurity play. I'd like to see them get profitable. But I love the growth there. Hey, OLP Papa, no way, dude. Thanks for all the gifts there. He says, MRVL, yeah, the chip play. Yeah, here's another semiconductor play. Now, that's not great. So it says the forward PE is a 52. So that isn't exactly cheap for Marvell. But let's see. Their data center revenue grew 38% year over year, reflecting robust demand and exceeding expectations. Their enterprise networking and carrier infrastructure increased 57 and 98% respectively, contributing to overall growth. The sale of the automotive Ethernet business generated a significant pre-tax gain, while the acquisition of Celestial AI aims to strengthen AI infrastructure. So their AI infrastructure for those two sectors grew like 50 and 80. That was really impressive. So it looks like one of the reasons why, if we go to their net income, it says they made 1.9 bill this quarter. Yeah, if we go to their cash from investing activities, if this is positive, that means you're selling out of an asset. You want this to be negative, but they maybe sold off a low margin automotive Ethernet business for $2.4 billion. So that's why their net income had this little one-time gain. Obviously, the operating profit excludes that one-time gain, and we can see that the core business actually made a great money, 367 mil. They used to lose money every quarter. Now they're making legit like 200, 300 mil a quarter. Top line growth is phenomenal, 36, 57, 63. So anyway, interesting growth name there with that with their enterprise little help there. They're expensive though at that forward PE. I noticed you use forward PE. Yeah, because that uses the next year's net income. We can look at their current PE ratio, and their current PE ratio, usually sometimes companies have one-time adjustments to it. So you always look at the forward multiple. And we'll look at SE as well after this. Here's one that's interesting. Hey, MSA, remind me to get to CIE in. I want to get to all of these. I do apologize. So here's Snapchat right here. They actually are making all the users pay to keep your memories. It's crazy. And they're actually being boycotted right now. A lot of people don't like Snapchat for that. But basically, Snapchat has to do this because this company, for all of eternity, if we head down here, is a money burner. It's so sad, but literally just all for eternity. We can scroll back since they IPO'd. They lose a couple $100 million of net income a quarter. They've never really made any profits. So that's what's unfortunate about Snapchat. They just can't get profitable. They have a lot of users though. Look at this. They have 477 million daily active users. This exact same time last year, it was 443 million. So their daily active users are growing. So the bull case here is you basically want to hold this one through the next 6 months as to see if they can get if it'll be a net benefit of them losing users for potentially making a lot of subscription and high margin revenue for people paying for those Snapchat premium. I won't be paying for it, but that's the bull case there. Okay. Oh, SE stock, or that was one. Yeah. So this is an e-commerce play. It's like an international Amazon. I think. Yeah. Dang, look at them the past month. They've got been straight down from 199 to 120, but the valuation is starting to get attractive. It's still expensive. A 35 forward PE. So do beware. A 35 forward PE. But let's see. Yeah, e-commerce basically in Amazon, but they're in Southeast Asia. So this isn't some U.S. company. 70% of the revenue is in Southeast Asia. Then Latin America. Actually, where are they headquartered? That I do want to know. Singapore. So do beware. They're headquartered in Singapore. So not in the US. You can see their quarterly active users are 670 million, and they make great money. This is their bottom line down here. These growth rates are great. triple digit, every quadruple digit. But yeah, they're making this is in USD as well. We've converted it. This is USD. They're making 300 to 400 mil a quarter. And at this growth rate, what's it going to be the same time next year? Yeah, those growth rates certainly justify a 34 forward PE. Amazon's cheaper at a 29 forward PE. So, but interesting there. Really interesting. I have an OTC stock, IDK, if you use it on your platform. I'll check it out. SNCAF. SNCAF. Yeah, unfortunately, I can't view the one. If you tell me the name of it, Atkin, I can probably type it in, and maybe sometimes it's a different ticker symbol, and I'm able to find it. Nike's review. Hey, header, we will look at Nike after this. I real quick want to do SoFi, and they remind me to get to Duolingo. I want to get to Duolingo, and Ishwar, no way, the legend's in here. So, let me just sip of my water here. So here's SoFi. They actually just yesterday launched a stablecoin. So SoFi Technologies introduces SoFi USD, a stablecoin backed by cash reserves. So they're getting to the stablecoin business, which is like, if you heard of Circle before, like Circle owns USDC, they make a lot of money. So SoFi's getting into that. This is what I love. Like, they're such an innovative fintech platform. They have their US banking charter. They got it through a loophole. And look at this. Their financial service growth specifically is what I love about SoFi. Check this out. The revenue's up 76%, after grew 101, after grew 222, after grew 264. Like, the growth rate is insane, and no analyst expected this sort of growth. We can see what the analysts were expecting. That's kind of this orange number right here. They beat on revenue, they beat on EPS, they beat on EBITDA, so no wonder they're gapping up on earnings so much and have a high multiple. People are really starting to take SoFi serious. They have great top line growth. They print bottom line, 100 mil a quarter. So SoFi is a fintech beast. I really like them. Oh yeah, CIEN. What was this one right here? Sienna. Wow, check that out. This stock is at an all-time high. Actually, multi-year high right now. Let's see, the forward PE is a 67. So their current valuation, they trade at 270 times PE, but the forward PE is a 66. So there really is a lot of future growth that's coming, and maybe the stock is pricing that in. So maybe the risk to reward doesn't look great at this price, but let's go see what they do. So networking platforms, you can kind of see their annual revenue here. Quarterly, though, it's a first ever $1 billion quarter. Yeah, for the first time on the whole list, it's $1 billion. So it's never been higher before. Global services is up 25%, also to a record 170 mil. So let's see, did that just beat expectations? So yeah, analysts expected 1.29. They did 1.35. So they beat on revenue. They did miss on EPS, but they beat on EBIT. So maybe it was a little one-time adjustment. Yeah, it was a one-time adjustment. It says they made 19 mil. Well, they really made probably around 75 mil of after-tax net income. So interesting name here. They've had crazy appreciation. That's actually crazy. And the analysts are expecting it. Yeah, revenue is going to go from 1.09 to 1.4. So yeah, 40% top line growth. Wow, the EPS is going to be 85 cents in 2 quarters. If that's true, annualize that. That's a nice, yeah. Yeah, there's a lot of future growth expected, and that might be why it's done so well. So, Nike. So they reported earnings, and the weird part was they triple beat. They beat on every metric. Wait, this is Q2, right? Let me double check. Wait, let's see. This article up here. Nike stock sinks 10%, on pace for worst day since April tariff shock. Yikes. So the company, the company says it expects revenue to decline by a low single-digit percentage this quarter. It thinks China performance will be similar to last, when footwear sales slid 21%. So yeah, the margins have just been compressed over here. If we could look at the revenue's up 0.59. So the revenue's up 0.59, but the profits, the net income, is down by 32. And it really is down by 32. That's not some one-time adjustment. So what does that mean in English? Margins are getting crushed. We go to the net margin's down by 32. Like every quarter, look at these year-over-year declines this past year on their net margin. That's not what you want to see. And their gross margin as well. Gross margin's down 7, 9, 7. So after falling 3. So I can totally see why this one has done so bad. And I used to own this one, and sadly, I don't think I'd buy the dip on them. And, the forward, like, look at that. The forward PE is a 30. That's more expensive than literally Amazon. Yeah, 30 forward PE. It's because the E part of the ratio is going down so much. The revenue's good. It's up, or not even good, not even inflation beating, but revenue's up 0.5, but net income's down 32. It's rough. I can see why Nike's done so bad, and it's a tough one. I think I'd rather buy Amazon. Amazon actually has a 11% market share for all shoes and apparel in the US to like Amazon private brand. Oh, I wanted to get to ONDS. Yeah, Ishwar, what's up, dude? So here's Ondas Holdings. They're up 19% on the day. Yeah, hey, sorry. We'll try and get to all these stocks here. Oh, yeah, we'll look at Rubrik and some of these other names. So Ondas right here, they are in autonomous systems. So wow, check out. This is probably why there's so much momentum. Well, it is small numbers. I mean, the revenue went from 200K to 10 million this quarter. That's a great quarter. You annualize that. That's 40 mil of revenue. So what's their current market cap? Market cap is 3.4 billion. That's a high market cap. But they have so much growth. Let's see what analysts are expecting here. So this quarter, they were expecting 7 mil of revenue, and they reported 10 million. So that annualizes 40 mil. But look in 2 quarters. Analysts in 2 quarters are expecting 25 mil. That's 100 mil a year annualized. So there's just a lot of future growth that's coming for this business. They're still losing a bit of money every quarter. They just fortified their balance sheet, probably from stock issuance. Yeah, so they issued 400 mil of stock. But there's a lot of top line growth. And as long as they keep beating on their top line, like by how they have been doing, they should continue to climb higher. I wouldn't have that. That's not a stock you want to have as a meaningful size position, though. Hey, we'll look at Fubo. Fubo's upside is limited from the Disney valuation, so that's why I wouldn't really touch Fubo. But we'll cover them too. So and Shark Ninja. I'm so behind here. We got to get to, and Stinky Pinky's here. No way. So we'll get to Shark Ninja and some of these other names too. So here's Rubrik right here. We're extra busy today. I'm sorry. But yeah, Rubrik, this is a cybersecurity play that does massive acquisitions as well. The stock is the same price that it was in 2024, and they have incredible top line growth. Let's see if this breaks it down. So subscription revenue grew 52% year over year, with their cloud annualized recurring revenue increasing 53% to 1.17 billion. Customer expansion was strong, with 2,638 customers generating over 100K in annual recurring revenue, subscription revenue, which was up 27% from the previous year, their customer expansion. Wow. So 2,600 customers making them over 100K a year. So if we go to their top line right here, this is what's crazy. Revenue's up 48%. After year 42. And then they just IPO'd. So that's why there's no more comps after that, because they literally IPO'd like a year ago. So this is a great growth name. Phenomenal top line. They're narrowing their losses too. They're doing acquisitions. Like they bought a company last quarter for basically $1 billion. So adding even more to the top line growth. So I really like Rubrik, and they're beating on expectations. They expected 320, they did 350. They lost less net income than expected. So Rubrik's a nice cybersecurity play. I do have them on my watch list. So let me do Shark Ninja. Oh, and Novo Nordisk and TNDM. We will get to in Fubo. Yo, I'm just not going to talk about the list. There's just a lot of stocks I want to look at here. Gotta get to. So here's Shark Ninja. They're kind of a unique kind of consumer discretionary company. This is the company that makes. They merged together. Shark and Ninja did. So they have like Ninja vacuums, but then the Shark. Or no, no, Ninja, like blenders. If you heard of the Ninja blender, oh my goodness, I just want to view your freaking products. Yeah, kitchen products. So yeah, they have like ice cream makers. We own their coffee maker. They sell like basically just kitchen stuff, and they make the highest quality stuff. And they trade at a fair valuation. They trade at 28 times PE. The forward PE is at 20, so that's pretty fair, for a kind of discretionary name like this. Cleaning appliances, cooking and beverage appliances, food preparation. So if you go to their bottom line, this is what's surprising. Like, it's consistently going up. This is great. These year-over-year growth rates are easily making over 100 mil a quarter. This quarter, it was nearly 200 million of after-tax net income. I'm assuming around Christmas time is their best quarter every year. But I'm shocked. 20 forward PE, great bottom line, no dividend. But I like that they don't pay a dividend because they can just do share buybacks. So they're doing buybacks. Net income's up 42. No, so they're not buying back their own stock, but anyway, they've actually done surprisingly good, and they make high quality products. So Fubo right here, Fubo TV. So this is that sports subscription service. So if it weren't for Disney, the reason the stock jumped up right here is because they got their stake and they got their Disney money. So the upside is limited. Well, maybe limited to a double at this point. Well, here's the bad news. If it weren't for Disney taking a stake into the stock, we wouldn't really be covering them, or because they the growth is gone here, sadly. The revenue's down 2.3% year over year. So the revenue's down 2.3, and they lose money every quarter. Actually, they have been narrowing their losses, but another tough thing is they really are diluting you. This isn't a stock I really love. Whoa, look at next quarter though. Oh, maybe this from the Disney merger thing. The revenue's going to go from 300 mil to 1.1 and then 1.6. So you're really waiting for these basically the next 6 months as they get those numbers. What website is this? Hey, what up, TikTok16? Yeah, hey, this is a brokerage. If you want to get this app I'm on where you buy stocks, it's in the link tree in my bio, very first link there. It is actually an affiliate link, so if you go and deposit $100, we'll both get a little free stock, full disclosure. But yeah, a broker called Moomoo. All right, let's see here. TNDM stock here. So Tandem Diabetes Care. Hey, what up, Jimbo Jack? He says, Uber looks crazy cheap. I agree. Uber at a 23 forward PE. I buy Amazon shoes. They're awesome. Yeah. Wii Ride. Ooh, and Pinduoduo. We'll check out all these. We'll look at Next Power. So here's Tandem Diabetes Care. They don't have a forward PE. They're only worth $1.5 billion. So they have a really small market cap. Oh, wow. So unfortunately, their stock hasn't done too well. The stock is way lower than it was in 2014. But looks like they're trying to so they sell the pump. Looks like the pump revenue is down 4% year over year. Supplies and other is up 8.5%. So let's see. When we combine the two businesses, the revenue increased 2.17. They're still losing money every quarter. Ooh, so remember how the whole company was worth 1.5 billion? Well, in the past year, they've lost over 200 million, which is actually well over 10% of the entire company. So they're losing over 10% of the market cap a year. They're leveraged too. They're actually leveraging up. The liabilities were 75% of the assets. Now it's 85. So it's a tough one. I can kind of see why they haven't done too well. I don't know. I'd keep the allocation of that one low. We want to see them get profitable, and we want to see the growth come back because it does look like only 2% revenue growth. It's rough. So, yeah, NXT. Let's do the NXT real quick. Next Power, and then we'll do some of these other ones like Wii Ride. Actually, NVIDIA owns that stock. So here's Next Power right here. They're a $13 billion company. The forward PE is at 25. Let's go see what they do. Next Trip. I feel like I've heard of them before. Integrated, no, I haven't. Solar tracker and software solutions. So, looks like some maybe solar play. Okay, yeah, no cookies for this website. Let's go look at what they do. So, revenue down here. The revenue's up a great 42% year over year, nearly $1 billion in revenue. So, revenue's up 42, and they have a bottom line. That's great. They're easily making over 150 mil. So, they have around a 15% net margin. Yeah, 16% net margin. But yeah, this is really good. They're easily making 150 mil in net income a quarter. The PE ratio, the forward PE said like a 25, right? Yeah, so 25 forward PE for a solar play. There you go. Next Trip. Yeah, it looks like they IPO'd like 2 years ago. They've done really good. I like First Solar as well. That's another cool one. So WRD, I think that's Wii Ride. You know who owns Wii Ride? The only reason NVIDIA has a stake in them is because they're buying a bunch of NVIDIA chips for their cars. But yeah, WRD, this is Wii Ride. It's basically Chinese Waymo, or actually not even just, well, they're headquartered in Chinese, but they're expanding in Dubai right now. Let's see if we can find that news actually. Weekly news. Yeah, look at this right here. We Ride and Uber launch robotaxi trial in Dubai. We Ride's We Pilot 3.0 wins China intelligent driving competition. Well, hey, that's good. That's kind of like their Tesla competitor, if like they're building their own systems, but yeah, it's a tough one to buy. Nvidia does have a stake into them. Let's see, they're losing money every quarter, but they have a great balance sheet. So it's one of your robotaxi startups, which I think is going to be so commoditized. I don't know what the net margin at the end of the day is going to be. Okay. All right, let's look at some more here. PDD. This is actually the company that owns Temu, so kind of like a Chinese Amazon. Let's see. Is there any news here? PDD introduces co-chairman system and highlights Temu growth amid EU investigation. What's the emphasizing its global market presence and commitment? Well, anyway, let's go look at their bottom. They print money over there. What's the multiple? So a 10. Wow. So you can pretty much pick up Temu at 10 times net income. So it's a cheap valuation too. Not too shabby. Yeah, this is in USD. We've converted the currency. They obviously report in Chinese. Dude, yo, try not to spam in chat there. That's not cool. Hold on there. There we go. But yeah, if we go to their bottom line right here, they're easily making 3 to 4 bill of net income a quarter. And I think they don't pay a dividend. So let's see, active users, they got 750 million monthly active users, their monetization rate, all that. So anyway, there's Pinduoduo. It's Temu publicly traded, and they're trading at 10.4 forward PE. That's pretty fair, actually. Pretty fair. Oh, PGY. What was this one right here? Oh, Pagaya Technologies. You can see this one too. I think DM will grow. Kratos. Hey, Kratos is a cool one too. So here's Pagaya Technologies. The forward PE is a 13. That's actually so interesting. The forward PE is a 13. That's a cheap valuation if that's true. Let's go see what the expectations are. So yeah, the EPS is going to be 34 cents, then 28, 23. So that's phenomenal news. Revenue is going to go from 289 to 350. EBIT is supposed to grow, and they beat on expectations like crazy this quarter. Wow. Yeah, the revenue's up 36. The profits are up by 380. Like, this is insane. They really are, like, that's the core business. Like, they really are making heck of money now. So that forward PE of a 14 really looks fair. And that's why, actually, they're a good stock. They're on my watch list, actually. Yeah, they've already been on my watch list. There you go. It's some, it's like software name. Interesting. Yeah, that's a good PE ratio. Yeah, Galaxy Digital does, nothing's really blowing me away there. Let me do Kratos Technologies real quickly, because this one I think will really impress you. They have really good financials. We'll look at a few more stocks here. Then I'll get out of here because I know it's Friday. But yeah, here's Kratos Technologies. This is one of the most quality growth names I've seen out there. Like, you're not going to believe this. Let's see if AI will break down some of the systems. Nah, that's okay. But check this out. This is their revenue. It grew 270% to 268 million. Out of this 268 million of revenue, which is incredible growth, they netted 82 million. They're finally printing money. The growth rates are insane. And another huge margin of safety is this fortress balance sheet. They literally have no debt whatsoever. Lots of cash, lots of net cash. Their cash is earning interest as well. So yeah, like the free cash flow is insanely growthy as well. So everything here is just headed in the right direction. Pure growth, like AI beneficiary. Do beware, they don't pay any taxes because they're actually headquartered in the Cayman Islands. So they're headquartered in the Cayman Islands and pay no taxes, but that's why their margins are so high. So they're a super growthy name. I love them. Perfect growth stock. Just great financials. Yo, what's up? Love the lives you do. Very nice. It's like a podcast. Hey, while I do other things. Yo, I'm glad you enjoy that, Random. Thanks for saying that. I appreciate that. Okay, I'm so behind here. Can you take a look at VeriSign, I think. Let's check out, or Veritone, sorry. Veritone, then we can look at AutoZone. I do really like AutoZone. Are the stocks accessible in Kenya? That I don't know. I wish I was an expert on that. I unfortunately don't know that. But I'm sure you could buy an ADR. Yeah, certainly can buy these American stocks as an ADR over there, I'm pretty sure. But here's Veritone. Oh, a very small company. Okay. If you look in the top right, this company is worth 459 million. You know, that's a very small market cap. And yikes, this stock is lower than it was in 2017. 2017, it was a $14 stock, and now it's $5. Well, let's see. So software products and services, licensing revenue, how's that doing? Are they beating on expectations? So they beat on revenue by $1 million. They missed on net income, and they beat on EBIT. So it's kind of like a mixed bag here. So the revenue's up 32%, but that's after it fell 21%. And they have a really leveraged balance sheet as well. That looks really bad. They're losing money every quarter. You know, when you're look at this, so you see how it says they made 31 million. They didn't actually make 31 mil that quarter either. They're losing 15 to 20 mil a quarter. When you lose 15 mil a quarter, which is 60 mil a year, that's well over 10% of the market cap. So I would be careful with this one. Nothing's really blowing me away here. No growth really. Yeah, what was the combined sales growth? Revenue was up. Oh yeah, 32%, but that's after the that's after it fell 22 and after it fell 25 and after it. So I don't know. I'd be careful with that one. There's a lot of risk. What's the previous stock you talked about? The PR something? Oh, I think it was Pagaya Technologies, PGY. Yo, by the way, I always forget to mention this. If you guys want to support me, I literally sell nothing. I have no course book. Please watch out for people impersonating me. I'll never follow you, DM you. I don't coach. I literally do nothing. The only thing I do have, if you want to support me, and I really would appreciate this, if you subscribe to my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert and watch the stream from there. I don't get many viewers on there, but yeah, you can also rewind the YouTube stream in case sometimes I talk too fast, but yeah, you can like rewind it and see what stock I missed. So let's keep going here. You know what? We'll do Galaxy Digital for you. This is some super like startup. Or well, actually, let's judge them off their numbers. I don't remember their numbers. So here's Galaxy Digital. I think it's just some like Bitcoin adjacent company. Let's see. Do they have a forward PE? They do. Wow. So they do have a forward PE. They're actually, let's judge them off their numbers because I'm saying a lot of stuff. Let's see what they actually do. They engage in digital assets and data center infrastructure. Let's see their website right here. Helping the world invest, build, and transform relentlessly. Well, that doesn't explain too much. Yeah, why is it? Okay, so they got $17 billion of assets on the platform. Oh, so I think it's like a fintech, like almost like Robinhood kind of thing, where it's like a platform where you like maybe trade crypto on. Anyway, let's go look at their numbers right here. Numbers, revenue. Look at that. Actually, that's actually good numbers, and that is in USD. 28 billion of revenue. They netted 500 mil on that. That's actually really good. Let's see. Digital assets are most of the revenue. It like bumped up like crazy quarter over quarter. Treasury. Where's the revenue come from? It doesn't say where the revenue comes from because I don't think this is like a US company. I think, but let's check this out. Digital assets accounted for 99% of revenue, driven by institutional demand in a 9 billion Bitcoin transaction, causing a 140% quarter over quarter volume surge. That's what was crazy. Yeah, driven by an institutional demand, $9 billion Bitcoin transaction. Infrastructure expansion progressed with $1.4 billion project finance secured for Helios Data Center Phase 1 and CoreWeave increasing power capacity commitment. Balance sheet improved, ending with $1.9 billion of cash. Well, this is actually a really good stock. I actually like this one, Gia. Thanks for telling me. Balance sheet improved significantly, ending with $1.9 billion in cash and stable coins. So some crypto kind of Coinbase-y play. See, that's why we got to deep dive and research these. Hey, Jay Shelton, what's up? Ooh, Eric said CEG. Actually, I'll be quick about this one. This is my favorite utility. If you're looking for a utility stock, if you want exposure to that industry, this is the best one, the growthiest one, in my opinion. They own 30% plus of all the US's nuclear reactors. It is the purest play for nuclear energy, nuclear reactors. There is no close second, and I do own them. Full disclosure. Looks like that must be on some fake volume. How they fell after hours. I'll check that out later. But yeah, I do own CEG right here. I own them in my dividend only portfolio. We're up 73%. They are expensive right here, but they're my favorite unregulated utility. Looks like Google went up right at the close there. Strong growth in new copyright lawsuit. What is that new copyright lawsuit news on Google? Let me actually just pull up Google real quick. Google's first off a great never sell. Google randomly look at the end of the day there. It almost looks like they gapped up. Was there any specific news? Google Cloud and Palo Alto Networks signed $10 billion AI security partnership. Google to launch TPU v7. That might be the news. Google rehires AI engineers in talent war. Gemini 3 Lotto. Oh, so Google files copyright lawsuit against Serpapi over security breach. I don't think. Anyway, that's kind of the news on Google there. BTC. Look at Nebius. So Yeah, hey, Nick, where do I check their ARV ride stuff? Where would I go to check that? Catherine said AVR. Let's do AVR real quick. AVR. What's this one? I actually haven't heard of this name right here. Unlimited pump. What up, Luigi? Atro, which we'll try and get to. Ooh, and Netflix. We'll get to all these. Please go buy PGY so the stock goes up. I'm a shareholder. Hey. So Portello 52-week low. Can we have a look? Hey, Juan. Yeah, we'll look at Portello's too. I'm so behind. Sorry. So here's Antiris Technologies Global. Let's check them out. They're a small name. They're only worth $203 million. So they're worth $203 million, but development and commercialization of adapt anti-calcification tissue. So it looks like year over year, the revenue declined 44%. Was that, so they did miss on expectations, but I guess 2 quarters from now, they're expecting 1.2 million. Next quarter is supposed to fall to 200K, then 1.2 mil. So we're just playing with the very small numbers here. That's not a great balance sheet either. They used to have a lot of cash. So how much are they losing? Whoa. That's why their cash, look at that. It went from 80 to 60 to 40 to 20. Why? Because they're losing 20 mil in net income a quarter. It kind of perfectly makes sense. So they're going to have to raise more cash. Yeah, they rose 80 mil of cash, which again, the whole companies were 200 mil. So they diluted you by 40% for another year of cash. And now they're going to be running out. So this stock sadly is in a rough spot just from a pure financials numbers point of view. So I'd be careful. Stefan resigns from board. That one I'd just be careful with, just because the numbers are so small there. It's under Nebius. Not sure if the AV Ride update I'm on Moomoo. But I know it's a deal under Uber. NBIS. Let's do Nebius real quick. So Nebius, and then we'll do Portellos and Quails, and I'm just okay. Weekly news. Nebius unveils AI Cloud 3.1 and NVIDIA Blackwell hardware advanced features. So yeah, basically there's a lot of data center demand. This company got a $18 billion cloud contract with Microsoft. And if we go to basically the top line, it went from 32 mil to 150 mil. These triple digit growth rates are very nice. And they're still losing money. They're still losing 100 to 130 mil in net income a quarter. But look at the expectations. In 2 quarters, analysts expect 469 mil of revenue, and they're supposed to narrow the losses to only 66 mil. So hey, in a perfect world, that you really just want to hold this one for the next 6 months. I think they're going to be a winner for the next 6 months. In the long run, I don't know though. That's, hey, Jim Cramer is specifically shorting Nebius. Maybe that means we should buy it, right? So Portello, I think this is like a restaurant company. I feel bad if you own this one, Juan. Because, yeah, a lot of restaurants have been getting smoked, and it's not just Portello's. Yeah, this company's only worth $350 million. like Wendy's, for example. This is so sad. Wendy's is pretty much at an all-time low. Jack in the Box, if anyone remembers that kind of restaurant, they're at the 2002 stock price. Krispy Kreme donut all-time low. They just can't get profitable. They're only worth 780 million. So a lot of restaurants are struggling, and Portillo's, we'll check that one out. I've actually never been there. Let me actually see what their website is. Wait, so serve street food through multi-channel restaurants designed to ignite a sense and create memorable dining experience. Let's check out their website right here. Want free fries? Heck yeah. Oh, hey, that actually looks good. Candy cane shake. So it's like a restaurant. Anyway, let's go look at their numbers because that's what's going to be the bad part. So the revenue, okay, so this isn't inflation beating, but the revenue's up 1.7. Last quarter was up 3.6, then 6.4. Yeah, so look at their bottom line here. This quarter, yeah, so the profits have really fallen, but they're still net income positive. That's the thing. I like that they're still at least making net income every quarter, but I can see why this stock has been struggling. Because the forward PE, the price to net income is a 21. McDonald's is around a 24, and that one might be more quality. This one could have more growth upside. I don't know, though. I do like Domino's Pizza as well. Domino's Pizza might be a better pick. The restaurants are rough right now. If I was going to buy the dip on one, I don't know if it's just tough. All right. Appreciate you. It wasn't there. Yeah. Hey, I wonder, I can ask, if I wasn't streaming right now, I'd do it for you. You can ask like this little AI bot, talk about the AVR ride Uber partner. And then we would hit it. And I wonder if we can come back to this and if it'll be there. So there we go. We'll let that run and come back to that. And I need to get also a phone charger. Dang, 4% on the phone battery. That's not good. Sold my CoreWeave today. Hey, you must have made a good little profit on that. Oh, let me get to Netflix right here. I want to get to Netflix. And hey, what up, Jordan? Yeah, I like CEG, but it's expensive. I agree. Mersana. Hey, Jordan, what's the ticker symbol? Are we looking at stocks or crypto? Mainly just stocks here. Dude, may I see your account and triple it for you? Hey, what's up? I appreciate that. Wendy's is so sad because they always okay. Think about starting a position. They just IPO'd not long ago. 100 restaurants, they own all of them, no franchise. Oh, so they're all corporate owned. That's interesting, kind of like a Starbucks. So let's pull up Netflix right here. And let me, while this loads, let me get a charger for my phone. I don't want my phone to die on me. We got the charger here. All right. Okay. I have to back out of Netflix and click back into it because the chart glitched. Okay. All right. Oh, yeah. So look at this. Warner Brothers demands Larry Ellison's personal trust, his wealth sovereignty trust, be backed by the deal because basically Warner Bros. Is trying to be acquired right now. And Netflix is paying $82 billion. And Warner Bros. And Skydance bid $108 billion. But the $108 billion deal has a lot of holes in it where like they can back out of it. And it's not even backed by the main person's wealth. So they're right now they're going with Netflix. It looks like Netflix's co-CEO defends Warner Bros. Discovery acquisition amid antitrust concerns. Yeah, there is that. Because they're already the number one market share, about to acquire another like 13% market share player. So there is questions around that. But here's why Netflix can easily afford to do this acquisition, and honestly, it would net at the end of the day be good. I think if they bought Warner Bros. But every time they have to pay more, like, if the bidding war keeps happening, it's even going to be more decretive to their EPS. So that's why specifically Netflix has been struggling this past 2 weeks. But anyway, check this out. Their bottom line is great. They're easily making $2 to $3 billion of after-tax net income a quarter, and they don't pay a dividend. So they don't owe anyone any money. So that's how they're doing over $2 billion of free cash flow too. That's how they can afford to pay for Warner Bros. Discovery. And all that noise aside, the forward PE on Netflix is a 30. A 30 forward PE. It's a subscription model. A lot of people would cancel their Netflix subscription last before a lot of other things. They have 300 million premium subs. Their average monthly revenue per membership is $11.69. So Netflix is actually making a pretty penny, and it's a business model that I'm a believer in. All right. Let's see. BHC, please. BHC. Let's check this one out. BHC. They're a Chicagoland special and they're trying to expand. Oh yeah, that's what. Yeah, the Chicago. That peppermint milkshake looked really good there on their website. Sorry if I'm missing stocks here. I will get back. We're gonna be live for another probably like 30 to 40 minutes at least, or maybe to an hour. So because I'm having fun here. So here's Bushka Health. Small one, a 2.5 bill market cap, but look at this forward multiple. It's a 4.8. That's interesting there. So while the stock has done terrible, it kind of reminds me like a Cormetics right here. That forward PE is cheap. Let's see the EPS estimates. So yeah, the EPS is supposed to be 44 cents and 13 cents. So yeah, they're supposed to have a whole year of making like 100 mil in net income every quarter. So that's great news. Yeah, sales are up 6.8, net income's up. So they're an insurance company because they're leveraged like one. Let's see. No, they're a manufacturer of generic branded pharmaceuticals, medical devices, and over-the-counter products. So honestly, that multiple there of like a 4 is very interesting there, of a 4 forward PE. So they can do massive buybacks and dividends all at a cheap price, and it'll be really meaningful. Yo, you not pretty or pretty. What up, said FWRA. Let's check it out here. Wait, FWRA. I typed that one in for you there. FWRA. I could not find it. Or maybe it's a different ticker symbol or something. MRSN. Mersana is MRSN. So, this company is getting acquired. So yeah, you gave another stock here. Let's look at that one. He says TNYA. TNYA. So another therapeutics company. So they're worth $150 million. They're at an all-time low. Do they have sales? So yeah, so they're a startup. If we go to their right now revenue, it says 0 because they've never sold anything, not a product or a service. So that one you got to be careful with. You know, they're worth 150 million with no revenue and they're losing 20 mil a quarter. I'm going to go and tell you guys my favorite biotech. That's an industry I always stay away from, you know, with like those little prescriptions and stuff. But let me show you guys. I do own one. And this is my favorite pick right here. And again, these kind of stocks you never want to own as meaningful size positions. And this is Cormetics right here, CRMD. We're only up 7.7%, but this company has some of the most impressive numbers I've ever seen. So this is Cormetics right here, CRMD. A lot of people are short this one. Let's see the short interest. 20, that's normal for the industry, but 22% of all the shares are being shorted on Cormetics. But look at the forward PE. The current PE is a 5.4, so they trade at 5.4 times net income. They trade at 3.9 times next year's net income. You can't make this up. The whole company is worth 947 million. So the whole company's worth 947 million, and they're making a net income a quarter 20 to 50 million. This quarter specifically was just a record freaking blowout quarter for their deaf and cath. I could not believe it. Now there is a bit like 20% short reason for a reason. Most of their sales come from this one like 6 hospital group, 6 different hospital like group. But anyway, but this deaf and cath growth has been incredible. And now they're diversifying away because right now they only sell one prescription, but they just acquired Melinta. Remember how the whole company was worth 960 million? Well, if we go to their casual investing activities, they spent $300 million buying this company. And you won't believe this, but whenever they bought the company, it's instantly accretive, double digit to their EPS. It's double digit accretive. Anyway, this is, if I had to pick out of all the biotech companies, this one I've just found I love looking at financials and stuff. This one from a financial point of view, I just think it's this huge safety net, having that great fundamentals behind it on top of having a great product. So anyway, that's kind of, hopefully that was helpful there. Maybe you can add that one to your watch list. Again, as much as I love that stock, you never want to keep it as a meaningful size position, but whole company's worth 900 mil. They're making 20 to 50 mil of after-tax net income a quarter. So pretty cool. Oh, FWRA, my bad there. FWRA, thanks for that. Wait. FWRA. Dude, is it FWRG? Oh, dude, I'm just like slow to, wait. FWR. I'm so sorry. I'm just typing it in wrong. We found it. So First Watch Restaurant. So another kind of restaurant. Let's actually check out their website. I want to look at it. Uh-oh. Hopefully that didn't show my low. Okay, good. I just checked the stream, but it nearly just showed my address because it pulled up the little Apple Maps thing with my street and everything. And but yeah, here's kind of their website right here. Join the team. So I want to see like a picture of their website. But anyway, first watch breakfast, lunch, and dinner. Let's see what their numbers are because that's what matters. We can also look at the Cheesecake Factory if anyone wants to see that. Ooh, they don't. Do they have a forward PE? They do. It's a 54. So that's expensive for a restaurant, a 54 forward PE. But let's see. Revenue's up 25% year over year. Hey, they're in kind of like the same boat of Portillo's, that other restaurant we were looking at. They were doing like 300 mil of revenue a quarter, and they were netting like a couple mil. Looks like it's a bit choppy, but they are getting back to real consistent money. 3 mil this quarter. 2 mil last quarter. So we want to see them, and then they are expecting that from the analyst expectations, that 50 forward PE, because the current PE is like 150. So they are expecting 30% net income growth, but I think it's just struggling because the whole restaurants in this environment. Like, of course, we looked at Wendy's and even like the Cheesecake Factory as well. The Cheesecake Factory is the same price that it was back in 2015. And it's because just the slow growth, sadly. Like if the Cheesecake Factory, here's the Cheesecake Factory restaurants, even after opening up new restaurants and stuff, look at these year-over-year growth rates in the middle, 0.5, 0.9, 0.7, 1%. Like that actually, sadly, doesn't beat inflation. Just these less than 1% growth rates. So that's why, but look at the Cheesecake Factory, like they still make good money, 40 to 50 mil in net income a quarter. Now, if you're looking for the best restaurant stock, in my opinion, and it's kind of not really a restaurant because they're a completely different business model than Wendy's. Here's Wendy's stock, for example. Remember Wendy's, this is, oh my goodness, this is so sad. In just in 1 year, they're down 50%. Year to date, they're down 50%. So it's because Wendy's has the wrong franchise model. You'd think if Wendy's is doing bad, McDonald's has got to be doing some kind of bad, right? Well, no, McDonald's actually yesterday hit an all-time high because McDonald's is not a restaurant. They're actually a real estate and royalty company. That's what's genius about them. McDonald's, whenever you go spend $100 at any McDonald's, 4% of that or $4 goes back to the parent company as a sales and marketing royalty because the corporation does a bunch of advertisements and the franchises all benefit. So they just don't mind paying that back to McDonald's. And they own the land under 80% of all the stores. So every tenant, every franchise also is a tenant who pays rent back to the parent company. And they always pay above market rates. So anyway, McDonald's is my favorite pick. I do own them, full disclosure, but that's why this one doesn't have such a bad stock because it's a whole different company. In 2008, like whenever there's a recession, historically sales at McDonald's go up and they acquire a bunch of cheap real estate. Like in the tri-state, in the triangle of every city, like the McDonald's has the most prime real estate. Anywho, that's the restaurant industry, kind of. Okay. Let's look at some more here. Hey, S. Lopez says, great day in the market. Absolutely. He said TGIF. I know that stands for TGI. Thank goodness it's Friday, but SoFi, let's see if this ETF still exists. TGIF. Oh, they took it down. No way. TGIF used to be an ETF. Oh, no, it delisted. So this was SoFi. SoFi, the stock, had their own ETF and it paid a dividend every Friday. And it actually didn't do terrible because it had like JP Morgan and but TGIF was a cool little, it had no volume or anything but weekly income there. And now actually the better alternative, if you wanted weekly income, I don't really recommend that. All the quantum names. I swear it was like QBTS, but it's not that. QUBT maybe? There's XEQT. I don't know. There is it started with a Q or something. It doesn't matter because, okay. Any thoughts? Ooh, let's see here. Mark, he said, what are your thoughts on IMMR? Not sure why their finances are so delayed. Could be a good long-term play. Let's check it out. And Rocket Lab, after this, we'll do Rocket Lab. I saw that one a few times. So we'll do Rocket Lab. And sorry if I'm missing stock share. I do want to get to all these. We'll be live for like another hour or so. Don't worry. Maybe not that long. But we've been live for already an hour and 40 minutes. So thanks to everyone that's been here. If you guys actually want to hit the follow button, we stream every day. I sell absolutely nothing. I have no course book. although I don't coach, please watch out for people impersonating me. So here's Immersion. Yeah, small market cap here, a 208 mil market cap, but the current PE is a 3 and the forward PE is a 15. So their net income is expected to fall, but that's still a cheap valuation on a forward PE basis of 15. So let's go. Whoa. Barnes and Noble's education. So they actually own Barnes and Noble's, kind of like the bookstore maybe. Oh, Doobyware, or 39% of the revenue comes from Japan. Maybe they read a lot more books there than the US. So Japan, then, wait, this is from 2023 though. Germany and the US, wait. Yeah, so actually this is wrong. It kind of ignore this because that's the old business. They merged with them. So that's why if we go to their balance sheet right here, look, kind of out of nowhere, their assets were 240 mil. Then they went up to 1.3 billion. So they acquired Barnes and Nobles or something like that. Let's see. They do have bottom line. They made 19 mil, 50 mil, and the forward PE is a 15. So I guess if you want exposure to Barnes and Nobles, this is your way to do it, I believe. Are they like a blank check, like acquisition company? Immersion. Maybe we can digital experience, haptic technology. Well, this is a whole different thing here. PS5 dual sense positive feedback has sparked in checks for haptics. Anyway, they must have, I don't know. Hopefully that was somewhat helpful. I think they own Barnes and Nobles. It was a bit of a weird one there. But okay, let's do Rocket Lab real quick. This is a space stock. They have done a bunch of recent launches. Wow, they're up 17% to an all-time high today. That's incredible. Rocket Lab secures an $820 million U.S. Space Force contract for satellite program. So that's why they're up so much in the day. The satellites will include advanced missile warning systems and Phoenix infrared sensors. This contract, along with the previous $550 million contract, brings their total contract to 1.3 billion. So that's great news. So they already have a lot of growth. This is like the growthiest space stock, still like really overvalued. Like 37 bill market cap is super insane, but it's the growth rate. So if we go to their space systems revenue right here, this is phenomenal. You know, it's over 115 mil of revenue just this quarter. It was a record for the first time ever. It was over 100 mil. So that was up 36%. After grew 81, after grew 15, after grew 890. So they're on a streak of growth. There is no red. So, and not just on their space systems business, but also the other part of their business, their launch services is up 95%. They also have like a $500 million backlog of orders. And now with this new order, it's probably going to be even more. Yeah, the number 2 line here, launch services surged 95%, supported by 4 Electron launches and 17 new contracts with a backlog at 509 million. Not too shabby. So this is your, this out of all the space stocks that exist, LUNR, ASTS, Rocket Lab is the best, most quality one, you know. You also, if you own Google, you have exposure to, I guess, the same industry. You know, Google, if you didn't know, this is kind of a cool little fun fact about this, like a whole ETF at this point. But Google owns 7.5% of SpaceX. And SpaceX is about to IPO, well, in like a year at a $1.6 trillion valuation, which, man, is a lot of money for Google. But yeah, there's that Rocket Lab, good little contract there. That was pretty crazy. Would you buy Netflix at this price? I would actually. I would buy Netflix at this price. I would nibble on it. Like you don't, like if I wanted Netflix as 5% of my portfolio, I'd probably make it like 1 or maybe even 2 to 3% today, but I wouldn't make it the full 5% because I do feel like it could go a little lower. And if this is the permanent bottom and it never gets back to this price again, then GG, you tried and at least you have some small position, but they'll probably go a little lower. So we got to get through the noise of the finalization of the Warner Bros thing. So let's hope it doesn't have to get bid up. So, hey man, what stock we are talking about? Do you only invest into Robinhood? Or hey, by the way, I forgot what stock I was talking about there. I think it was Netflix or Rocket Lab. Yeah, Rocket Lab. By the way, I'm streaming on YouTube. That's the best way to support me. Please go watch the stream from YouTube. TikTok's always giving me issues like removing my For You page or removing new people from seeing my stream from the For You page and stuff. So if you want to support me, the best way to is just watch the stream from YouTube. It's called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert, and I'm streaming on there too. So Rocket Lab all-time high today. Yeah, that was crazy. 6-star. That man said, thoughts on ATV. Hopefully I can find this one for you. ATV GE. Okay, I typed in that ticker symbol. Yo, that man, if you give me the name of that stock, I will check it out for you. Blackstone. Hey, here's kind of like a private company. Um, I thoughts on mRNA. I bought at 22. I love them. Hey, yeah, hey, what up, Isaiah? We'll do mRNA. I sold Rocket Lab yesterday. Well, hey, Braden, don't worry. You still made a lot of money if you sold Rocket Lab yesterday, because Rocket Lab was pretty much also at an all-time high yesterday as well. But yeah, here's Blackstone. It's kind of that asset manager, those memes that are like the Blackstone managers on their way to outbid a young couple from buying their first new home. So yeah, their private equity is most of their business. Then real estate, that's 30% of the business. Credit and insurance, that's a cool industry to be in. How's that doing annually? Look at their just credit and insurance. 2020 it was 680 mil for the year. Now it's 2.6 billion. So nice little growth rates there. And that's one little bet for them. How's their private equity doing? Let's go on the annual there too. So that looks like it's at a record. Anywho, so if we go to their bottom line down here, they're easily making over $1 billion, 1.2 billion net income a quarter. The forward multiple is a 14.5 PE for Blackstone. You get a 2.81% dividend yield. They're very diversified in a lot of different industries. 68% of the revenue comes from the US. So anyway, there's your BX stock, Blackstone. Good dividend, good forward PE. They're just like a smaller BlackRock. I do like BlackRock as well. That's another good one. It's another good one. So let me get to, what was it? mRNA or yeah, mRNA. This was one of the COVID companies that were selling vaccines. And yeah, that's why, 2021, with all the Delta variant, all the noise, this was a $400 stock. Now it's $33 just because they aren't selling those vaccines anymore. Let's see what this is. Moderna secures $54 million for phase 3 trial of mRNA influenza vaccine. EU regulators recommend approval of Moderna's vaccine for ages 12 and older. FDA considers black box warning on Moderna's COVID vaccine. I probably should not be saying these words on fully because the algorithm will pick up on these words and I'll get in trouble. But let's see. COVID vaccine sales accounted for 95.6% of the revenue, supported by revenue beat despite overall decline. Pipeline progress. So this is kind of what you want for the future. Pipeline progress includes advanced phase 3 trials for personalized cancer and seasonal flu vaccines, while discontinuing CMV vaccine deployment after efficiency failures. So yeah, let's see what their revenue is. So this is not good. This isn't really what you want to see. This quarter revenue was down 45%. Last quarter was down 41, then down 35, down 65, obviously because they're not selling vaccines anymore like they were. And if we go to the bottom line, they're losing a lot of money. So that isn't, it's a tough one, Isaiah. That's also the reason why they've done so bad. Oh, wow, they're up 9% on the day. That's actually great news. And actually, hold on, watch out for the person and people in chat there. If you ever see someone in the chat's like, first 5 people to DM me, I'm giving a free, don't worry, I'm copying that guy's username and sending him to my friend, and he will be gone off TikTok very soon. But yeah, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing at all. I'll never, yeah. So anyway, they actually have had a nice little recovery the past week here. Look at that. Maybe just some positive results on these, the securing the trial results. Anyway, it's an interesting one there. I honestly, if I had to pick one, Pfizer or mRNA, I'd pick Pfizer. And I actually just bought a little bit of Pfizer. It's not a stock I really should own. It's another huge, beneficiary of vaccines. But this stock does not do well. Like Pfizer's the same price that it was in 1997. So Malachi, Moomoo, Weeble, Robinhood, yes, sir. What is a good stock to invest into if you only have $100? Hey, that's always, I remember being there. My account for the longest time. Actually, I can show that. Can we pull up the all-time? Yeah. Here's a very good my portfolio. For the first couple months, my portfolios were like $160, $150 for months. And then I deposited when I was more, don't worry about the individual share price. You can buy fractional shares. I'm never scared to buy fractional shares. Who cares about the little psychological 0.1? You'll eventually get it back to 1. But yeah, I was buying Ferrari. I was buying 0.1 shares of Ferrari. So basically your question is, what stock should I buy the dip on? Any high quality stock that you like, one with good fundamentals, and I always say invest in what you use. Like if you love Instagram, buy Meta, or if you love like Facebook, and if you like McDonald's, Google, which is YouTube, CEG, our utility bill, our natural gas utility bill is through Constellation Energy. So, if you got the Amazon Prime subscription, I got Amazon stock. If you own a Ferrari, you could buy Ferrari stock, but maybe one day. But yeah, if you like Coca-Cola, buy Coca-Cola. Like, invest in what you use. Don't buy like these random micro cap stocks. Those are fun to sometimes trade. You do that with a little bit of money. But yeah, have the backbone of your portfolio in really great stocks. ATGE Technologies. Let's do it right here. So Adtalam Global Education. So, hey, we'll look at HCA. Heck yeah, Lopez. Heck yeah, I love that stock. And hey, user one, are you still here? Should we look at ServiceNow too? We'll check that one out too. So here's a global education stock. Looks like they gapped down, and it was specifically on earnings. So let's go look at their earnings report because it doesn't look good. So they beat on revenue. We don't get the EPS estimate, and they beat on EBIT. So they must have given bad guidance because they beat on expectations, but the stock fell. So they own Walden, Chamberlain, and medical and veterinarian. So I think this is a school company. They own maybe colleges. It operates. Let's check out their website right here. We are 5 institutions and companies, over 10,000 employees with community of 300. Okay. Looks like like a nursing, it said online training, maybe like an online school. So if we go to their bottom line, this is a great bottom line here. It's great, actually. These growth rates too. They're making 50 to 70 mil in net income a quarter. What's the forward multiple though? A 12. So they currently trade at 15 times net income, and they're trading at 12.8 times next year's net income. So I do wonder why the stock had such a massive decline. That is kind of odd. Well, I guess maybe they were just doing so good before today. Yeah, they had a really good stock performance. Maybe they're just getting back to a normal valuation. I don't know. They seem really good, at first glance. There's another college stock, and I'm not going to remember the name. There's another college stock I like. Oh, here, let's do ServiceNow. Then we'll get to HCA Healthcare. And what up, Tom? Let's do it, Tom. So, Uber. I really like Uber. Hey, Supreme Beast. I really like Uber at their current prices. They're like $89 a share too. Hey, actually, I do. All right, so here's ServiceNow right here. Oh, Meta's another good one. So here's ServiceNow. This is a software name, kind of being hurt by the AI thesis. Did they just pay a dividend? No way, that's a dividend. No, a reverse split. That's what that orange dot is. Okay, they did a reverse split, 5-for-1. So yeah, that is. This stock before today used to be like $600 a share. Now it's $155 a share. They're going through some acquisitions. I think they're trying to buy CyberArk. Let's see if it'll still load down here. ServiceNow completes MoveWorks acquisition to enhance AI and workflow. So they acquired, I love when companies acquire businesses. ServiceNow in advanced talks to acquire $7 billion acquisition of Armis. So here's another one. They're also trying to buy CyberArk right now. So they're also trying to buy a bunch of companies. But let's go look at what their numbers were. So they're a subscription model company. Subscription revenue grew 22% to $3.3 billion, fueled by enterprise AI adoption and large deal closures. So here's the best part. Customer base with over $5 million in annual contract expanded 18% year over year to 553 customers. So they literally have 553 customers paying them over $5 million a year or more. That's insane. And they print bottom line. If we go to their net income, after tax net income, this is real. They really do make 400 to 500 mil of after tax net income. And at this growth rate, what's it going to be the same time next year? Free cash flow is even better. That's what FCF stands for, phenomenal free cash flow. The estimates are just up and to the right on revenue, EPS, EBITDA. So, and they beat massively this quarter. Maybe they're super overvalued though, sadly. Like if we go to their multiple, well, not super, but the forward PE is a 72. They're currently trading 93. Forward PE is 72 is expensive, but this is the kind of stock that absolutely deserves a high multiple. I think it's actually a better buy than Salesforce currently. I love Salesforce too. Let me go over a bit of a healthcare play real quick. So we were speaking of Pfizer a minute ago. Y'all are going to love this one. If you like financials like I do, this is a fascinating one. At a 15 forward PE, check this out right here. First off, let me just go over this simply. The revenue's up 9.57. So revenue's up 9.57 and the net income is up by 28. And that really is true. Net income really is up by 28%. So what does that mean? It means margins are going up. 8.6% net margin that grew. But look at the EPS. This is the best part right here. Again, the earnings per share is basically net income per share. This is what you want to see. They did $6.95 of EPS. And basically another way to kind of calculate a dividend payout ratio is just look at the EPS versus the dividend. The dividend only cost 72 cents of EPS a quarter, and they did $6.95. They could pay for the entire year of dividends and it basically like half a quarter. And that's the net income per share. Look at the free cash flow per share. It's $19, a record. And why is the EPS growing so much faster than the net income? Well, it's this simple reason. This is the main reason I own this stock, is the share buybacks. I've never seen a company do it better than this. And this is actually the better metric. This is normally people look at the total common shares outstanding. I like looking at the diluted weighted average shares because it includes stock options and stuff. But look, they've bought back 9.13% of the company, after they bought back 5.6% of the company, after they bought back 6%, after they bought back 8%, after they bought back 2%. They're a buyback monster. I've never seen a company do it more. So in 2020, there were 340 million shares. Now there's 236. Just literally 10% of the shares bought back just the past year. So that's why the net income was up by basically 30%, but the net income per share was up by 40 because the share part of the ratio went down by so much. And whenever they buy back their own shares, that makes the EPS go higher, makes the PE ratio go down, gives you more ownership in the company, makes the cost of the dividend go down too. So yeah, look at this. This is their after-tax net income. They made 1.9 bill after they paid, 800 mil of taxes. So they made 1.9 bill in net income. They pay a dividend. The dividend only cost, where's the exact number here? Look at the bottom left, 166 million. And 2 quarters ago, it costed 180 million. Why the costs go down? Because they bought back their own shares. When you buy back your own shares, you don't have to pay dividends to those shares. So in conclusion, that's a great healthcare. It's a hospital stock. They're a for-profit hospital group. So some people ethically don't like it. I do. That's actually the largest holding here in my Roth IRA. And it's because of the great numbers. And historically, they're less like prone to recession. Like in a recession, maybe hospital sales go up or hospital visits go up. But anyway, we get a little dividend coming in from them too. But yeah, we're only up 1.96% on the shares. It's the kind of stock that's just going to continue to climb higher and give you 10% of your money back a year, I think. Like that, it's a monster. It's Amazon for 2026. Yeah, hey, I do own Amazon. That's a great stock to buy and never sell. Yeah, they're actually in here in my buy and never sell portfolio. Absolutely. Is the college stock you're thinking of legacy education? It's not actually. I had it in one of my. Oh, there's no way I'm gonna be able to find this here. This is. I wonder how hard. Oh, dude, I probably have to go up so much. Actually, shouldn't be too much longer. I have this little. Oh, it's right here. Here's the stock I was talking about. Okay, this is the college stock I was talking about. Universal Technical Institute, and you can kind of see their website right here. Bro, what did I just click? Oh my gosh. So Universal Tech, my Discord is broken, bro. Oh my goodness. This is why I don't like Discord. You know what? It doesn't even matter. It's probably because I'm streaming and it wants to be difficult. But yeah, it's UTI right here. So ticker symbol UTI. This is Universal Technical Institute. They look at this. This is just a college. They own some college campuses. And I wanted to pull up that slide again. But look at this bottom line. They're making 18 to 20 mil of net income a quarter. And the forward PE is a 33 forward PE. That is expensive. But I wanted to go back to this slide real quick because there was something very fascinating. So 4 out of 5 grads employed within 1 year. That's kind of what they advertise as their, hey, if you're looking for, college, but 4 out of 5 grads employed within 1 year. That's kind of what they advertise. So 2 in-demand industries, 32 campuses nationwide, plus 3 more announced. Here's their guidance right here. Full year 2025 guidance of 60 mil in net income. Remember, 60 mil in net income, the whole company is worth 1.43 billion. So sorry, I kind of took on a little too long on that one, but there's an education stock that you could add to your watch list. The valuation might be a little expensive, but there you go. I'm a student, 19 years old, so I don't have much money, but I just buy stocks like Meta. That is great. Yeah, hey, exactly. When you're 19, you don't need to have a lot of money. Actually, fun little fact. If you're 18 years old and you invested $8,000 when you're 18 and never invested again, so you invested $8,000 when you're 18, you would have around $500K when you retire at 40, or is it 55? Oh, that's actually a big difference because that's 10 years. I don't know if I did 45 or 55 years, but let's just call it 55 years. Basically, if you can invest 8K when you're 18, you're good for life. But if you can invest more, because the time and the compound interest, like the goal isn't to get rich quick. It's literally to get the 10% CAGR and snowball it. You're supposed to turn $100 into 110, but then it CAGRs. That 110 goes to 123, then 123 to 155, and then it just snowballs higher. But yeah, Meta's another diamond hand never sell company, and the valuation's fair. Hey, yeah, we'll get to ONDS after this. Sorry if I'm missing some. Would you agree GameStop over Amazon? No, I would not really. No. But yeah, 22 forward PE on Meta. And this is crazy. They literally have, pretty much half the world is on one of their apps a day. Meta has 3.54 billion daily active users, with Instagram, WhatsApp, Facebook, and they're actually introducing ads to WhatsApp. I love they're losing on AI. Like, remember Llama? Llama's like it's all about ChatGPT and Gemini at this point. But one thing, their AI beneficiary, their secret is what I think is Meta's Ray-Ban. I'm glad they're getting away from the metaverse. They're doing the augmented reality glasses, like the Google glasses, kind of. That's, I think, a great concept. I love the Meta Ray-Bans, the Meta Oakleys. They're really cool. And it was a record Q3. They made $20 billion this quarter, record sales, $50 billion for the first time ever. One thing being questioned, though, is how much they're spending on AI, because check out the bottom right here. They're spending over $20 billion of net income a quarter, which is more than the net income they make. So they're spending more than they make. And for the first time ever, for the first time in Meta's history, Meta actually has a net debt position, but they can easily afford it. That's with their Prometheus data center bond they just issued, I think with Blue Owl Capital. But this is the kind of company, they're like an Amazon. They should be investing in. I love Meta, and I own them. Full disclosure, I'm totally biased. So let me pull that up. Actually, here's my Robinhood portfolio. We got 5 shares of them. We're up 25%. It's not like we crazy bought the dip on them. They're up 140% the past year, 5 years. We're only up 25, and we have a small little dividend coming in from Meta. Actually, if you notice, this is my dividend only portfolio, and here's kind of my dividend history. At the very beginning, we got like $1.50. Now we get $2. So it's just so little. Again, you're not buying Meta for the dividends. You're buying it for the stock price appreciation. I miss these days. I was buying Meta at 440, 450, but then I rose my cost basis. I bought a share at 659, 644. So we used to be up a lot more, but we kind of rose our cost basis on Meta. Great one though. That's the kind of stock that you should focus on your quantity of shares more than your total percent change. Like the person who has, even one more share than me is always ahead of me. Even if I'm up 1,000% and you're down 1%, you're ahead of me because you got the extra share of it. So anyway, here's Ondas Holdings. This is kind of like an autonomous car company. They're spending a lot of momentum around this name because their financials have actually finally had some decent growth to them. If we check out specifically what the analysts are expecting, this is crazy. Analysts are expecting, small numbers. You would not ever want to trust this stock with like a really meaningful amount of money, but they're expecting 25 mil of revenue. This quarter, they expected 7 mil and they reported 10 mil, 30% beat. So basically this company is transitioning from a complete startup with no revenue to a company that should do 25 mil a quarter, which is 100 million a year annualized. So it's basically going from a company with no sales to finally sales. And that's why I think there's been so much momentum around this name. How it went from 80 cents to $9 is 10x, because they've really shown that this isn't there's no real chance of bankruptcy now anymore. Plus they just fortified their balance sheet. When the stock rallied up to like $12 nearly, they diluted you by, let's see how much they did, $400 million. But it fortified their balance sheet for life, where they can afford to lose 10 mil a quarter for eternity now that they have such net cash position. Ooh, so yeah, would I agree GameStop is better than Amazon? I actually would not, but GameStop, they used to be an interesting one because of their net cash position. They still have $4 billion in net cash. So here's the thing about GameStop. If you look at the market cap, it's $10 billion, okay? The whole company's worth $10 billion, and they have $4 billion of net cash on hand. So here's how that's from. If we go to their cash from financing activities, again, if this is positive, that means they're either issuing debt or diluting you by issuing shares. You don't really ever want this to be positive unless it's for good use. But every time the stock rallies, they dilute the life out of you. But it's also smart for them. So if we go to their cash on hand, Another thing, they just issued debt to get some of this cash. So actually, I'll start with that context first. If we go to their total long-term debt, what I loved about them is they had no debt. They literally had 9 million of debt, no debt at all. But literally just 3 quarters ago, they issued $4 billion of debt. So they now have $4 billion of debt, but they still have $8.8 billion of cash. So they used to be in a position where they had 4.4 bill of cash and no debt, but now they have 8 bill of cash and 4 bill of debt. So still, but it's all from dilution. So every time you don't want to see the total common shares outstanding. This is why the stock will never go up in the long run, despite 40% of the market cap being cash. It's because the EPS is not going up by that. So anyway, look at this is where the diluted weighted average shares. So there's 590 million shares when the same time last year there was 437. So look, if we just kind of zoom out, it's so sad because you own 35% less of the company after you own 43% less of the company after you own 0.5% less of the company. So, but that's also what fortifies their balance sheet. Anyway, that's the one thing. You're not buying them for the fundamentals. You're not buying GameStop because of their revenue. Like we can go to the revenue right here. Like these declines, you're not buying them for their fundamentals. You're buying them hoping Roaring Kitty tweets something, the stock goes up like crazy again. Hopefully that was helpful. I don't mean to bag on you. I know I'm probably losing viewers on bagging on some of these names, but I just try and keep it real, keep it honest. Here's my portfolio today. Here's our open profit and loss. Look at this. We're only up 18.35% all time in here. Not Meta. AMD had a great day. A lot of the fintechs did. Is anything down? Clear Secure is down. Southern Company a bit. Can you check Beyond Meat? I sold off my position. I don't see the future there. I sure can. And I think you made the right move there selling out of Beyond Meat, because there's actually real bankruptcy risk here. And after you like this happens to you once, the best thing is to learn from this, and you'll never buy another company like this again. Because I bet when you originally bought the stock, or this has happened to me a million times, like with so many other companies when I first started. So here, like a lot of people don't know what they're buying. So this is the kind of stock that even though they're at an all-time low, they're going to continue to hit newer and newer all-time lows, in my opinion. So if we just think about this super logically, we'll keep it really simple here. If you look at the market cap in the top right, the whole company is worth $503 million. So you could buy the whole company for $503 million. So let's say you did that. You paid, hey, let's all pitch in $1, okay? No, but really, you buy the whole company for $500 million. Here's what you're buying. You're buying a business that just this quarter, just in the past 3 months, lost $110 million. The quarter before, 30 mil, 50 mil. Like 50 million is already 10% of the company. So they lost 20% of the market cap, 3%, 5%. So, and that's not just like recently either, like just for all of eternity, Beyond Meat has sadly just burned through so much net income. And it's like, okay, well, they're burning net income. Are they at least growing their top line? That's the rough part. Oh, it scrolled all the way back down. So, and during that whole time too, when they're burning all that money, sales are on a massive decline. This is super sad. Look at this. Revenue's down 13% after it grew 7.5%, but that's after it fell 8.7%, after it fell 22%. Like this is from 2023 now, after it fell. So it's a tough one to trust, and they're really indebted. Look at this. They have twice as much liabilities as assets. Like, how are they going to pay off this $1 billion plus a cat? Like, so let's see their long-term debt. So how are they going to pay? Whoa. How are they going to pay off $1.25 billion of long-term debt? That's the nasty stuff you don't want. How are they going to pay that off when you lose 100 mil a quarter or 50 to 100 mil in net income a quarter? So this is why the stock's at all-time lows. The numbers always explain it. The numbers explain why Palantir is at all-time high and this stock is at all-time low. So that's why I think before you even buy, like even if you're trading something and your intention was to trade that, you should always just give a quick glance at the financials, and it'll maybe give you some more confidence, or maybe like if you're going to, oh my, dude, I keep logging out on accident. Oh, yo, sorry. I got to hide the screen real quick because I just logged. I don't know what I keep clicking because I don't know. Well, see, actually, we logged in very fast. Oh, hopefully. Okay. All right. We're back. See, I must have clicked something in the top left here. Well, maybe not let me play around with it, but okay. Why buy a company that has so much in debt? Yeah. Actually, we have a watch list here. If you like companies with no debt, we have a watch list here of zero debt stocks. GameStop used to be in this list because GameStop used to have no debt, but we removed GameStop. What is this? Top earner of the year. Oh yeah, hey, we actually had we're up like 80% year to date. Anyway, wait, review your report. Let's see if it'll. Actually, I don't care about that. Yeah, look at that. We got an 80% return money weighted return this year. I guess they gave me a cool little badge or something. Yeah, hey, by the way, if you want to get this app, it's where you buy stocks on my favorite brokerage. Link tree in my bio, very first link there. Uh, actually, yeah, check this out. If we go over here, year to date on a return money weighted average, we're up 80.3% year to date versus the S&P up 16%. Nasdaq's up 20. The reason we've done so well year to date is because we bought the dip during the tariff dip down here. Like most of the gains have come from just this stock right here. We bought the dip on Comfort Systems, and the other main reason is because we didn't sell before today. Most people, when they're up 100, 200% on a stock, will sell out at least some of their position, take some money off the table. But in this portfolio specifically, I have a rule where I'm not allowed to trim or take any profit. So I'm not taking a single dime of profit, and I never will. Same with like all these other stocks like Powell Industries. We're up 4x on this company, but I haven't trimmed a single share. That's why we're doing so well year to date, is because we're letting our winners win the same way an ETF does. We're letting our winners win. And that's what I actually hate about some ETFs. They don't let the winners win. Like an SEHD, for example, you don't really buy that to try and outperform the tech-heavy S&P. Market's so cooked right now. Uh-oh. Well, did something just happen in the overnight market? Or actually, let me check out the S&P. Yeah, look at today was a great day in the Qs. Whoa, we're even going up in the after hours market. New intraday high right now on the QQQs and on the S&P 500. Yeah, this was a super volatile week. Let's see. Yeah, on the week we're basically flat. Earlier 2 days ago we were down bad, but then on yesterday we had a recovery. And okay. Hey, thanks. Is the college stuff okay? How can you tell the cash flow, the free cash flow? Hello, I'm from Bangladesh. Hey, Omar, you speak a little slower. Oh, yeah, my bad there. Sometimes I do speak a little too fast. That's my fault there. Yeah, so we've been live for 2 hours and 20 minutes, and I'm just like on a streak. So do you buy a quantum computer stock? I don't really love any of the quantum stocks. I've looked at a lot of them, like QBTS, RGTI. There's no fundamentals here. Like that's the reason why the fundamentals sustain the rally in the long run. And riggedy computers, the reason they're so far off all-time highs is because there's no real financials here, no real numbers to back up the valuation. Like here's like RGTI, some random quantum stock I always see pumped in my chat, and I try to avoid it. But it's like, who's buying this? I mean, the revenue's down 19%. Like there's no revenue. They lost 200 mil of net income on 1.95 mil of revenue. So if I wanted a quantum stock, my favorite way to get exposure to quantum, and it's already the market leader, would be IBM and Google, and then probably Microsoft. Honeywell too. No, actually Honeywell is a huge one too. So I really like Honeywell. I'd pick one of the safer mega caps. Obviously Google and these aren't like a pure quantum play, but they're the ones you really want. Eric said, any thoughts on Vive? So let's check out Viva Systems. I just need to pick some ETFs. Yeah, hey, that's my number one advice. None of this is financial advice, but I recommend most investors, not just most investors, most ETFs that exist out there and hedge funds and retail investors cannot beat and outperform the consistency of the S&P 500's 8 to 10% CAGR. And if you can't beat it, you got to own it. So literally you'd be foolish not to own, at least to some extent, the S&P 500 or the NASDAQ 100. Keep that as the backbone of your portfolio. Then you play around with some individual strategies. Almost all my stocks are all in the S&P 500 and NASDAQ 100. So here's Viva Systems right here. They reported earnings and they gapped down on earnings day. Let's go see what those earnings were, because I'm assuming not great. But they beat on revenue, they beat on EPS, and they beat on EBIT, or earnings before interest. So they triple beat. Looks like a subscription revenue play. I love subscription model companies. It's all like reoccurring money. That's up 17%, after grew 17, after grew 12. So their subscription revenue is growing nicely. I wonder what happened then. Maybe it's just, they print bottom line. That's easily 200 plus mil of after-tax net income a quarter. And just a huge another safety net, takes a lot of risk off the table, is this fortress balance sheet. $6.64 billion of cash. Whoa, $6.64 billion in net cash. The whole company's worth $36 billion. So yeah, the PE ratio is a 36, but you honestly take off around 15% of the market cap, 15% from this PE to do an X cash PE multiple. Let's see how much interest their cash is making. So they're not just, these are in short-term investments, 5 billion of it. What are short-term investments? Those are the 1 to 3 week T-bills, the treasury bonds, where they just milk interest on their cash because they're doing nothing else with it. So if we go to their whoa, they're making 60 mil of interest a quarter on their cash. I mean, it's just incredible. So yeah, they have great bottom line. Does Moomoo offer cash? Yeah, actually, if you look at or cash account, yeah. And if you look at the middle of my screen, you can get the cash sweep too, completely for free. Actually, if you like this is my favorite brokerage right here. If you want to get this app to buy stocks on, it costs nothing, absolutely free. And the same as with this cash sweep. If you keep your idle cash in there, you get a 3.35% APY on it. So yeah, if you want to get this brokerage, it's in the link tree in my bio, very first link there. My favorite one. I can't beat it. My returns are double. Oh, hey, nice, Jay. The issue with the S&P is there's 14 good companies and 400. Well, it's heard the S&P. Well, actually, I wouldn't totally agree with that. They call it like there's like a nifty 50 of good S&P 500 company names. But there's a lot. It's a great index because you can't outperform it most statistically. What about a quantum ETF? I wonder, is it QTUM? I think that might be the quantum ETF. Yeah, Defiance Quantum ETF right here. And check that out. It's actually done phenomenal since 2019. It was $29. Now it's $111. Let's see what it owns. An ETF is just a basket of stocks. And whoa, I thought this said Taiwan Semiconductor, but no, this says Tower Semiconductor, Teradyne. That's a great robotics name, actually. Then there's Riggedy Computing, Micron, Intel, so not exactly a pure, but anyway, I actually like that it's not the micro caps. It actually has some big mega caps in here. So there's your QTUM ETF. If you don't know which individual quantum name to buy, the ETF diversifies it for you. I opened an account, but it automatically defaulted to margin account. Can I switch? Oh yeah, hey, so actually I have that too. I have a margin account. So basically, you'll know if you're doing it. Just never take out margin because then you get the instant deposit bonuses. But yeah, you'll know if you're using margin. You have to go out of your way to use it, and they sometimes have to approve you. But yeah, just making a margin account and then just like me, just never use it because I like the instant deposit bonuses and stuff. But you can switch it to a cash account. Yeah, I think I don't know if you had to do it in the first place, but I think so. Yeah, maybe contact support. The support's so good. Yeah, someone said another ETF right here. Kevin said VTI right here. So this actually is the Vanguard Total Stock Market ETF. This ETF owns every stock that exists in the world by market cap weighting. So even Powell Industries, it's like 0.0001% of the ETF. But yeah, it's market cap weighted. It's an international as well. So it owns Taiwan Semiconductor. It owns ASML. It owns Nestle. It owns Spotify. These international names that aren't US listed or US based, but they still own it. But it's market cap weighted. So that's why the largest, well, actually, that's why the largest holdings still looks very similar to the Mag 7 because of the or the S&P 500 because these are the top market cap companies. So yeah, we can see the different sectors. 33% is tech, then financial services. The financial services have gone crazy with like SoFi, Robinhood, and they're in healthcare. So I like how diversified this ETF is. So yeah, they got 2 trillion of assets under management just in this one ETF. That's why Vanguard is such a G. That's why you always see Vanguard as like the largest shareholder. Like if we click on Oracle or some random stock, the largest shareholder, your second place is Vanguard. It's not Vanguard that owns it. It's the customers who own their ETF, and that ETF then goes out and buy it. Yeah, VOO, QQQM, these are all phenomenal names. Yeah, QQQM, this is their NASDAQ 100 ETF. So here's a fun fact. Great little life hack. This is the exact same thing as the QQQ. We've all heard of the QQQ. It's the NASDAQ 100 ETF. This is the exact same thing. Literally exact same ETF run by the exact same Invesco people with the same NASDAQ 100 strategy, but with a slightly, or actually, they interrupted my speech there. I got to fill out a CAPTCHA now. Oh my goodness. Okay. We're back. TikTok made me fill out a CAPTCHA, but what I was saying was this is literally the QQQ with a 0.15% lower expense ratio. So for every $1,000 you put in versus the QQQ, you save $15 in yearly expense ratio fees. They're smart because you've never heard about this one because they don't market it. Like I was just in an airport, there's QQQ advertisements on the side of the airport, but they don't market QQQM because it would make them less money. Of course, they're not going to market it. So anyway, that's your QQQM right there. NASDAQ 100, my favorite NASDAQ 100 ETF. Ooh, Art said thoughts on AMD. So AMD, this is one of your chip plays. I do own AMD actually, full disclosure. Actually, today we're up 6.59% on them, but AMD is expensive. Forward PE of a 62. The current PE is 105. Forwards is 62, so their EPS is supposed to grow like 40%. But I bought AMD because I thought it was an easier double than an NVIDIA because of the law of large numbers. If we go to the mega caps right here, search stocks by largest mega cap, look at NVIDIA. NVIDIA is worth $4.4 trillion. So if you buy one share of NVIDIA, or if you buy a share of NVIDIA today, for you to double your money, they have to be worth 8.8 trillion. So it's just a hard double just from a law of large numbers. But that's why I picked up AMD, because they're just as growthy, but they're worth less. They're worth 350 billion. They're like in second place to NVIDIA. They're losing their market share a bit, but they got a big OpenAI deal. OpenAI, which is ChatGPT, owns 10% of AMD, and they're putting a bunch of AMD orders in. China Commerce Minister and AMD CEO. Whoa, China Minister and AMD Lisa Su are discussing right now. And let's see, is there anything else? Raises AMD price target to 300. AI collaboration with Lenovo during Beijing visit. Fractional GPU support. Well, anyway, let's get back to their numbers here. So this is the FCF, which stands for free cash flow. This is great. 1.9 bill of free cash flow. Like these year-over-year growth rates, it's almost triple digit every quarter. So these are incredible year-over-year growth rates on the free cash flow. Same with the net income's at a nice growth rate and a really good balance sheet. Like this is a fortress balance sheet right here. No net debt at all on AMD. So anyway, just a good semi play. Data centers are most of the revenue. It's kind of a genius because, what are in data centers? A bunch of GPUs, AMD chips, and AMD makes their own GPUs. So they don't have to pay AMD their own margin or anything. So they can just supply it to them themselves. And anyway, AMD's cool. It's kind of like the picks and shovels play, just like NVIDIA from this whole AI craze. Like NVIDIA, it's the picks and shovels play. U.S. bombed Syria moments ago. Let's see if the market moved on that. SPY, but knowing this, the market, yeah, look, the market did new intraday high right now. That's funny. After hours, we're at a new intraday high. That's interesting. Oh, AppLovin, this is a great one right here. What are the best dividend paying ETFs? Like a high yielding one? I know there's like they're not going to outperform the S&P 500, but there's the covered call ETFs, the like an SCHD, a REIT ETF. So here's AppLovin. This is a phenomenal growth stock. I'm talking one of the most impressive numbers I've ever seen. Hey, what up, Super Galaxy? Hey, what up, JVM? I do not have Uber yet, but I do super want that one. Thoughts on NOC? Oh, yeah, I think that's Northrop Grumman. I think we'll check them out too. That's an aerospace and defense play. But yeah, here's AppLovin. This is an advertising play, and they have some of the best financial metrics I've ever seen. Like, it's incredible. If we go to the revenue right here, the revenue grew 68% year over year, and they did 1.4 billion of revenue. So on this 1.4 billion of revenue, they netted 835 million. So that's the crazy part. So they have a 60% net margin. The margin expansion is incredible. So if you go spend $100 at this company, they net $60 after paying taxes. Like the net income was 835 mil after they paid 150 mil of taxes or more than that. They really are netting this, and they really have a 60% net margin. I did not expect the margins to continue to expand higher. And in the free cash flow as well, they had a first time ever billion of free cash flow, up 91%. I've never seen a more growthy name. They deserve all the hype around them. They 53 forward PE is expensive, but they deserve an expensive multiple. Impressive growth. Like, that's all I can say. It's just so impressive. I wish I bought them. I do wish I bought them. Oh yeah, another kind of higher yielding name this is a REIT right here. So actually I have a whole REIT list right here. Yeah, these are all REITs right here. REITs are just companies where 90% of their assets are real estate, like Simon Property Group. That's a mall REIT. Postal Realty owns like a bunch of, literally it's a pure like postal, like they own UPSs and FedExes and USPSs to land under them and do their triple net leases. This is a warehouse robotics or a warehouse real estate play, Prologis. But what was the REIT we wanted to do? Oh yeah, CubeSmart right here. That's a self-storage name. CubeSmart is specifically a self-storage name where most of their properties are in New York. And I love the self-storage industry. They, they're month-to-month lease, so you can easily capture inflation. Whenever there is inflation or if that comes back, they'll be able to capture that inflation. But check this out. This is what you look at the core FFO for a dividend payout ratio. They made 168 million this quarter. And again, it's a high payout ratio because they're a REIT, but the dividend cost 120 million. So they do have a safe and sustainable dividend, costs 120 million a quarter. I just love the self-storage industry. They're profitable. Self-storage is profitable at like 20% occupancy rates. They're month-to-month lease. You can easily capture inflation when there is that. And they benefit from the 4Ds, death, divorce, downsizing, dislocation. Self-storage benefits from all that. So it's less like recession prone and economically sensitive, I should say. So there's kind of a fun fact about self-storage. I do like that industry. NOC, this is Northrop Grumman. It's an aerospace and defense play. Now, I wish the growth was a little higher. If we look at the forward multiple, it's a 20. That's a cheap valuation, a 20 forward PE, but that's because of the single digit sales growth. Like if we look right here, the revenue's up 4.2, last quarter was up 1.3, and then it was down 6%. So these like low single digit numbers, that it's not really beating inflation. So that's why I think that 20 PE is really probably fair for this stock, or probably slightly cheap, but yeah, if we go to their bottom line, this is the incredible part. They're easily making, if you average it out, like 900 mil in net income a quarter. So they're making 900 mil of after-tax net income a quarter. Let's see, they pay a dividend. The dividend only cost 330 million. And since they have so much leftover money, they're doing hundreds of millions of share buybacks a quarter. That's another great thing. So yeah, they're in aeronautic systems, mission systems, space systems, defense. How's that doing? Defense, that's up 15% year over year. So interesting there. 87% of the revenue comes from the US, of 1.5% dividend yield, safe 29% payout ratio. They raise their dividend every year faster than inflation. So yeah, there's one of your aerospace and kind of defense names. Cheap valuation there. Ooh, AC said Macy's. And A&F, is that Abercrombie and Fitch? Let me check out them. So Nike, whoa. Okay, if they've done very well. So this is Abercrombie and Fitch. Nike today fell insanely bad, but this is kind of like a clothing company. Let's see, do we get any earnings reports? So America region grew 7% year over year, offsetting a 6% decline internationally. Oh, they owned Hollister. Okay, so their Hollister brand surged 16% year over year, while Abercrombie brand declined 2%, indicating brand level performance variation. Liquidity remained strong with 606 million in cash. Okay. Ooh, it said the share repurchase program. Let's go see the share buybacks. So they're easily doing 100 to 200 mil of buybacks a quarter, of net income a quarter. Sorry. They're easily doing 100 to 200 mil of net income a quarter. The net income fell by 14%. Here's a quick way to check if they did share buybacks. You see, again, the EPS is the net income per share. The EPS growth rate and the net income growth rate should always be the exact same. The net income fell by 14, but the net income per share only fell by 5.6. Why did it fall less than the net income? Because of the share buybacks. I can't believe this. They bought back nearly 10% of the shares. Let's go see how much they're spending. Yeah, look at that. They spent 100 mil, 50 mil, 200 mil, 100 mil. So they're plowing money in share buybacks right now. And the whole company is worth 5.5 billion. So yeah, they're buying back hundreds of millions of their stock at 11 PE. Okay. So there you go. Brands are, and clothing and trends always change. So actually, well, there you go. There's Abercrombie and Fitch. It's kind of like a consumer clothing company. Here's Nike as well. Nike was struggling today. Worst day since the tariff dip. Yeah, they reported earnings. Used to own Nike. Let's see here. I've been at work for 2 hours and you're still live. Hey, yes, sir, Katie. We've been live for 2 hours and 30 minutes. Yeah, if you guys want to hit the follow button, we stream every day. Raphael said, what are your thoughts on Zora? Let's check out Zora right here. Actually, I looked up Zora. I actually can't find that ticker symbol. Maybe it's a different ticker symbol there, but I did try and find it. Or Zora AI, or I don't know. Hey, what up, Kevin? I just picked up Rolls-Royce and Nokia. Hey, Rolls-Royce is actually another kind of interesting one. A lot of people, when they hear Rolls-Royce, they think of the cars, but Rolls-Royce, the stock, is actually an aerospace and defense name. They make engines, jet plane engines. But yeah, look at this. 50% of Rolls-Royce civil aerospace business. See, sorry, I just disconnected it for a second. There's test. Okay, we're good. Sorry, if it lagged out there. But anyway, yeah, they're an aerospace and defense name. 50% of the revenue is aerospace, 24% is defense, power systems is 22, and they're printing good money. Again, this is a European company. Or actually, they're reported in British pounds. So where are they headquartered? Okay, yeah, Greater London. Okay, so they're headquartered there. That's why they report in halves. That's why it says H1 in full year, because they report in halves. They don't report quarterly. But for the first half of 2025, this is incredible. They made $6 billion of after-tax net income. So yeah, there you go. Rolls Royce is an interesting one. What is this? What do you think of Sentinel One right now? Isn't that ticker symbol S? Let's see. Yeah, Sentinel One, ticker symbol S. So they're almost at an all-time low. That's not great. I wonder what this company does. So they don't have a forward PE. So they're not expected to make any net income anytime soon. They created the world's first specially built extended detection and response platform based on AI, making network security defensive. Well, let's go look at their website real quick. Sentinel One, free platform demo. So they're saying secure and protect every aspect, leading autonomous protection. So some sort of AI software. Record breaking. Okay, well, anyway, let's go look at their numbers because that's what matters. Actually, do we get like an AI breakdown of anything here? That'd be cool. Okay, so look at this. The revenue grew 23% year over year, surpassing estimates. Annual reoccurring revenue reached $1 billion, and net losses narrowed significantly. AI-driven platform expansion and acquisitions enhanced operational efficiency and customer deal sizes. Q4 revenue guidance was conservative, slightly below consensus. Well, anyway, let's go look at their numbers because I look at this. So this is the one bad news. If we look at the bottom line here, the net income, they are losing, 70 mil in net income a quarter. So we do want to see them narrow the losses, and they have been. They narrowed the losses by 23% year over year. So that's great. Revenue is up by 22. Net income losses narrowed by 23. That's great news. I said acquisitions. Yeah, maybe they are doing some acquisitions. Anyway, I don't love that they're still losing money, but analysts are expecting them to lose money if they keep losing. So they have been losing more than expected. It's a mixed bag there. We want to see them get profitable. It's like a interesting one. I probably wouldn't have it as like a big size position. Waiting on the SpaceX IPO, yo. That's in about 1 year from today. You'll get that. Kevin 400 said thoughts on Hood. Let's do Hood. Ooh, and GHM. Hey, Elger, should we still? Graham is a nice one too. I really like Graham. And Walmart, yo, and SAPLF. We'll try that one too. Paying off their debt and growing their revenue. Yeah, hey, that's great, Rubes. So here's Robinhood. This is a financial tech platform. It's a brokerage. I use Robinhood. I've given them a lot of transaction fees and stuff like that. I have my portfolio, my Roth IRA with Robinhood, and they deserve to be doing this well because Robinhood has really, they've expanded their what you can do on the platform. You can do prediction market contracts and you can do crypto. And the prediction market contracts is 20x times more valuable than like a normal stock trade. They make so much commission on that. So anyway, look at this growth. We look at the revenue was up 100% year over year. The revenue was 1.27 billion. Out of this 1.27 billion revenue, they netted 556 million. So literally, and that's real. That's after they paid 89 mil of taxes. So they really do have a 44% net margin. The margin expansion is crazy. These year-over-year comps are great. Revenue's growing nicely. Bottom line's growing nicely. I love the platform. They're expensive. The stock is expensive. At a 48 forward PE. I'm also a shareholder of Robinhood. That's actually one of my biggest regrets is every share I've ever sold of Robinhood. I only have 5 shares left. It made sense at the time. Like I was buying the shares at $8, $9, $10, but I sold most of my position at $36. It was over like a 3x gain. It made sense at the time, to take most of your profits at a 3x gain, but now we're up 8x or well over that. So I do regret every share I've ever sold of Robinhood, and I'm never selling the rest of my shares. So, did I just unplug my mic? GHM. Let me just hope I didn't. All right, so GHM right here. Graham, they're on my, I actually really like this stock. So if you look at the market cap, it's a very small company. They're only worth $670 million. But here's the thing. Out of all the companies out there that are worth $670 million, I want to buy the company that's making millions a quarter. Like if you go to their bottom line, they're literally making a couple million of net income a quarter. Like all the other companies that are worth that amount, like a couple hundred million like that, are usually losing net income every quarter. So that's what I love to see. They're profitable. The sales are going nicely. Revenue's up 23 after grew 18. They're in like three main businesses. They have like I think like a $200 million backlog. I've made a few YouTube videos about this stock. So yeah, actually, I really like this one. 670 mil market cap. Probably not the best risk reward valuation buying in today, but I do like them. I do like them. SAPLF if possible. Hey, give me, okay, so they're called Sylvania, SYLVA. SYLVA. I can't find their ticker symbol. I did try and check. If you give me their name, maybe it's sometimes under a different ticker symbol. Hey, what up, Ran? He said EOSC. Let's do EOSC, then we'll do PACS and some of these other ones. Wait, EOSC. Okay, so EOS Energy. They are probably in demand right now just from the whole AI electricity take up. So the stock went from $1 to $12 right now. That's insane. So let's go look at the analyst expectations. Yeah, so look, it's just up and to the right. The revenue is literally going to go from 10 million to 96 million. The top line growth is massive. Next quarter specifically. If you're a shareholder of this company, wait for the next 6 months here because literally next quarter, the revenue is going to go from 30 mil to 93 mil in just one quarter. So yeah, look at these year. So they're basically just now for the first time finally having revenue. So they had no revenue before today, and they're finally transitioning to a company with real revenue. So there you go. It's an interesting one there. They have been missing on expectations. Let's hope they don't keep on missing on expectations like that. So PACS, whoa, they had a great earnings report. So they reported earnings and then they gapped up and have just been up ever since. Let's go see what they reported. So, whoa, analysts expected 1.15. They did 1.35, so they beat on revenue. They missed on net income, though, but they beat on EBIT, so maybe it was a one-time adjustment. So, yeah, revenue's up 31% year over year, and the profits are up 275. Yeah, just like I thought. So, yeah, they really did make like 50 million net income this quarter. What was the forward multiple on this company? The forward PE is a 17, so they're practically supposed to double their net income because the PE ratio currently is a 33 and it's going to a 17. So yeah, the EPS is basically supposed to double. They must have had some really good guidance on this quarter for them to, gap up so much. So there you go. What do they do actually? Are they like it's a holding company. Post-acute healthcare facilities provide senior care assisted living. Oh, so maybe like 32 post-acute care and senior living or 321, in 17 states. They had 30,000 patients and residents supported daily. So yeah, that's kind of an industry that is heard supposed to be in such demand. Kind of like a well tower too. Like well tower, they're another one of the senior housing facility groups, and they just have done phenomenal. Okay, Giovanni said, what do you think of NXDR? Let's check that one out. NXDR. Oh, next door. What do you think of GIFI? Yeah, we'll check out a few more of these. Heck yeah. Dang, we've been live for almost 3 hours. Yeah, if you guys got any last minute stocks you can look at, let me know. Probably won't be live for too much longer, but I appreciate everyone being here. By the way, if you wanted the follow button, we stream every single day. We'll even probably be streaming a lot next week, even though it's the holiday. So here's Nextdoor Holdings, a very small name here. And I always try and just give you my honest thoughts on each stock here. And if you want to hit the follow button, we stream every day and I sell nothing. Please watch out for people impersonating me. I have no course, book, WhatsApp. I'll never follow you, DM you. But yeah, they're worth $850 million. Looks like there was some crazy volume spike right here. I wonder what caused that. Maybe we can check the intelligent comments here. Smart money. So Nextdoor integrates real-time earthquake data into Nextdoor alerts. What does this company do? Is it like a real estate company? Okay. Social network site connecting with neighborhood and businesses. Oh, the Nextdoor app. Oh, I've heard of, yeah. Like you kind of someone's like your neighbor, you tell your whole neighborhood. It's kind of like we have like a Facebook group, but it's kind of like that thing. Let's see, are they profitable? I would be curious. So no, but the revenue, okay, this is a good growth, 5% growth. Last quarter was up 2.8, 1.94. So yeah, and dang, and they're losing 10 to 20 mil in net income a quarter. That's what you don't want to see, but they have a great balance sheet. Like they can easily afford these net income losses. Look at that. So yeah, the cash pile is declining, but they have $403 million of cash and no debt. Well, wait, hold on now. Remember this, the whole company's worth 850 mil and they have 400 mil of cash. So literally half of the market cap, half of what you're paying is just their cash on hand. And then they lose 12 mil a quarter. So honestly, it's an interesting name there. I wonder how they can get this app to profitability. But they're narrowing their losses. They can afford to lose money because of their, cash on hand. And beat on expectations this quarter too. It kind of reminded me like a Life 360 almost. So yeah, there's your next door. Had some volume spike. Maybe they were trying to get acquired or something. GIFI. What's this one? Gulf Island Fabrication. So okay, so this company, whenever you see like a flat stock like this, that means they're getting acquired. So the upside would probably be nothing because they're getting acquired. So $190 million company. What is this? Fabricated complex steel structures. So anyway, it's great that they got acquired. So that'll be under a new ticker symbol. Oh, SAP. Let's check out SAP too. Yo, Rand, we just looked at EOSE like when you first said it, or maybe. Okay, so here's SAP right here. By the way, if you missed anything, we're also streaming on YouTube. You can like rewind it. And I didn't even see that. Yo, Life Wonders, dude, with the 19 roses. I didn't even see that. Hey, thanks, Life Wonders. If you got a stock you want me to look at, let me know. So here's SAP. They're an Australian company, I think. No, they're headquartered in Germany. Sorry. So headquartered in Germany. It's kind of like a cybersecurity. Well, let's see. Cloud business grew 22%, driven by cloud ERP suite demand, with backlog increasing 23%. So they got a backlog. Profit margin increased 12%. Overall revenue growth slowed to 7%, aligning with expectations, but decelerating from earlier quarters. So yeah, that's okay if they beat expectations. So yeah, look, actually, they're barely meeting or slightly missing on expectations. So miss on revenue, but they beat on net income. I wonder if that's real. So yeah, it looks like it. So yeah, the revenue's up 12. There's still double-digit growth, which is good. Revenue's up 12 after grew 15, after grew 8. And they're printing bottom line. This is their after-tax net income. Easily $2 billion a quarter. If you average it out here, $2 billion a quarter. They made $2.4 billion after they paid $400 million of taxes. Like, that's the after-tax number. So deleveraging their balance sheet too. Do they pay a dividend? And you get a 1% yield here. I think they changed their dividend every quarter. So it's kind of like a surprise, but yeah, 1% yield exposure to cloud AI. CTVA. Let's see if we can find this one. Cortiva. Hey, we found it. Heck yeah. Hey, what up, Ricardo and Travis? Good to see y'all. Hope you're having a great Friday. So here's Cortiva. They're a $44 billion market cap. The forward multiples of 25. So that implies like that's a pretty fair valuation. Ooh, Spotify. Spotify would be a really cool stock to look at. So they do crop protection. So and seed. So they're probably like some agricultural farming commodity stock, if I had to guess. Seed and crop protection solutions for the agriculture industry. So yeah, check that out. It's a pretty interesting name there. Invisible pest management. Nematodes are the most abundant multicellular organism on the planet that roughly take away 15 to 20% of the global yield potential. Anyway, maybe they're trying to solve this issue here. Let's go see if they're making money. So they have crazy revenue, actually. Wow. 2.6 billion, 6.5 billion. But what's their net margin on that? So it's a bit cyclical. Like they make money for 2 quarters, but then the other 2 quarters, they lose money. Yeah, it's always like Q1 and Q2. They make their 2 quarters and then they lose money. So we kind of average out the EPS here. What's the forward PE ratio? It's a 25. Oh yeah, 25 forward PE. And you get a 1% dividend yield here. So there's your exposure to crop protection. Interesting. Um, let's see here. Oh yeah, Spotify. Let's do this one. This is a cool stock. They don't actually own their music. It's owned by Universal Music Group. It's such a commodity. Like there's Apple Music, there's YouTube Music, and YouTube Music like looks the exact same. I actually use YouTube Music. It comes in my subscription. So, but Spotify has done very well because their premium subscribers just keep on growing. So yeah, check this out. They have monthly active users of 713 million. And of those 713 million, 450 people are non-subscribers. Or they on their ad supported. But yeah, if we go to their premium subscribers are here, but they actually have 280 million people that pay for their subscription. Yeah, hey, Klops, we'll do SOXS too. But yeah, the premium subscribers are 280 million. I wonder how much they pay a month. So yeah, the ad-supported revenue is only 10% of the revenue, premiums most of it. And look at this bottom line down here. Actually, they had a one-time adjustment that they had. So you really look at the operating profit, which excludes that little one-time adjustment that they had. So they're easily making, with these growth rates, like 500 mil of net income a quarter. So that's really great, but that's still really expensive. That's $2 billion net income a year on a pretty generous 120 bill market cap. Well, actually, the forward PE is a 43. Netflix is cheaper. Oh, again, we're looking at, actually, I forgot to convert the currency. It's a European company. We'll convert it to USD. So they're actually making, 5 to 600, but actually a little bit higher. So that's good. Investing a lot into the future and their creators. Yeah, Tencent Holdings, second largest shareholder. That's interesting. So yeah, there's Spotify, kind of like a music app. I feel like it's going to be a commodity with like Apple Music and YouTube Music. Like I use YouTube Music. I don't love the valuation, but it's a good business. I think I'd rather own Netflix right now. Monthly active users grew 11% year over year, fueled by emerging market expansion and upcoming Netflix video podcast partnerships. Whoa. So Netflix and Spotify actually partnering. Premium subscribers increased 12% to 280 million, supported by localized pricing and new features like lossless audio in over 50 markets. So let's get off of Spotify. They're expensive, but interesting name there. Really cool name. Life said, what do you think of AMPX? Let me actually look at the AMPX first. Thanks again, Life, for the 19 roses. So this is Amprius Technology. So let's see what this company does. There's no forward PE, but a low market cap. They're worth $1.22 billion. Sale of battery products. Let's check out the revenue. Whoa, it went from 7 million to 21 million. So that's a great, triple digit growth rate for the past 4 quarters. What are analysts expecting? Yeah, so they expected 16 million this quarter and they did 21 mil. That's a big beat. And if they're beating on every quarter, like by 30% plus, what's it going to be when they expect, 22 mil up here? So anyway, there's just a lot of future growth that's expected here. Get no real net income expected anytime soon. United States is 34% of the revenue, but it's a battery company and 1.2 bill market cap. So as long as they keep beating on their numbers like this, this stock will probably just continue to gap up on earnings and continue their good momentum. So yeah, there's AMPX for you. Okay, yeah, I wanted to get to, is it SOXX? Is that a ETF right here? So this is the daily semiconductor bear 3X. Okay, so just from a pure mathematical point of view, if you don't know how the 3X leverage ETF works, it's not like trying to be bearish. It's literally mathematics from how it can't, whenever you fall 10%, that makes this fall 30 and it's harder for it to capture it back. So just from a math point of view, this always spirals to zero. I kid you not, it will reverse split always for eternity, spiral down to zero and continuing to hit zero and go for forever reverse splits. So this is something you cannot own for the long term. This is a get in and out of. It's a 3X leveraged bear ETF. So whenever the semiconductor plays go down, this goes up. So that's why it was down 7% on the day. So it's a complete trader's kind of vehicle. You don't want to own that for more than like a week or something. So yeah, you got to be right with the timing, which is tough. Give me a stock to invest in. I like, I don't know, Amazon. Amazon. Yeah, Microsoft's a great one. Ben said, what do you think of MicroStrategy? So, MicroStrategy, this is basically a pseudo kind of Bitcoin play. Usually, whenever Bitcoin goes up, they go up more than Bitcoin. But whenever Bitcoin goes down, they go down more than Bitcoin, as we can kind of see the past couple months here. But what does this company do? It's incredible. if we, well, not stock I own, but if we go to the cash and financing activities, again, if this number is positive, that means they're either issuing debt or issuing shares. They're not issuing debt. So they literally, like Q4, like if we go back to this quarter right here where it says 18 billion, they diluted you by $18 billion just in that quarter. And they bought 18 billion worth of Bitcoin that same quarter. So that's how the assets literally went from 8 billion the same time last year to nearly 80 billion this quarter. It's because they dilute the life out of you and buy Bitcoin, and the Bitcoin they bought has then appreciated a bunch. They kind of just bought at the wrong time. They bought so much Bitcoin over 100, like 105, 110K. But there's still like average cost per Bitcoin, I think is around 73,000. Their average cost for Bitcoin. Anyway, it's a pseudo Bitcoin play. At the end of I'd probably rather just own Bitcoin for the long haul, rather just own actual Bitcoin. But it's like a Bitcoin proxy, you could call it. Eli Lilly, hey, what up, Garrick? So this is your weight loss prescription, everyone. Good night, everyone. Hey, see you later, Eric. Yo, we're about to end the stream too. Dang, we've been live for nearly 3 hours. So yeah, FDA expedites review of Eli Lilly's weight loss pill. Oh yeah, so right now there's weight loss prescriptions like Ozempic and Zepbound, and those are injections. But it would be incredible, if they could get a pill version. I think that would be more widely adopted. That will sell like crazy. Eli Lilly to reduce prices of diabetes and weight loss prescription in Canada. Yeah, that's the same thing that's happening to Novo Nordisk. They're having to cut their prices like crazy, and it's really hurting their margins. But this is a growth beast. I mean, the revenue's up 53 after grew 20. After grew 28, like the law of large numbers doesn't hurt them. Like they made 17 billion of revenue and they netted like 6.5 billion. And the forward multiple is a 38. That's a little pricey. Wow. They're worth 1.01 trillion. So they're barely worth $1 trillion. Congrats to Eli Lilly. So yeah, it's your, they own so many different prescriptions. It's not just a weight loss one, but a lot of their growth has come with that weight loss prescription, and you get the pipeline of the weight loss pill. Eli Lilly achieves record weight loss in phase 3 trials. I remember they were doing their trials like it was around this time right here when the stock tanked. Their pill wasn't working. Like their weight loss pill legit just wasn't working. They had bad results, but now I guess it's working. Well, there you go. Taiwan Semi or Eli Lilly? Ooh, that's a good question. At current prices, I'd rather buy Taiwan Semiconductor. I always tell everyone to start with Pfizer. Yeah, Pfizer is a pure dividend play. Check this out. I actually do own Pfizer. They actually just acquired Metsera. Metsera is a weight loss prescription as well. I think that'll put them in the top 10 largest weight loss prescription. But Pfizer outbid Novo Nordisk for it. This is a stock you don't really buy for the weight loss stuff. That's kind of my interesting kind of thesis to see what happens. But Pfizer is a dividend play. Pfizer stock is the same price that it was in 1998. So you bought the stock in 1998. Is the same price that it is today, but look what it has, a 6.8% dividend yield. So definitely massively has underperformed the S&P, but you're buying this for the income and this new Pfizer acquires global rights to Fosun Pharma's oral GLP-1 drug and $2 billion deal. So, whoa, not only did they acquire Metsera for $10 billion, a different weight loss one, but it looks like they're acquiring another one, an oral, maybe, is that like another pill thing or some sort of thing? Targeting type 2 diabetes, includes 150 mil with 1.5 billion sale milestone. Anywho, I like what Pfizer's doing with some of their acquisitions. They are they got some debt though. John, what up? He says in Fly. You know what? Are you talking about Fly Aerospace? That's an interesting one there. Ooh, SoFi, please. Should we look at SoFi? Actually, let me look at Firefly Aerospace. Then we'll get to SoFi. And Taiwan Semi is a great diamond hand. Yeah. So Firefly Aerospace right here, they're up 22% on the day, probably because of all the space stocks are doing great, like Rocket Lab. Let's see. So, they did a SkyTech acquisition. So they just issued some shares to acquire SkyTech, valued at $850 million. Whoa. And the market cap is $4 billion. So they just basically acquired a company that's worth 20% of the whole market cap. So that's going to be a meaningful size acquisition. So let's see the estimates. Yeah. Look, the revenue is going to go from 15 mil to 72 million in 2 quarters. It's going to go to 50 mil. That's a record. So there's a lot of future top line growth that's expected here. With their IPO money, they fixed up their balance sheet. Yeah, so they had to issue 800 mil of cash, but they're about to acquire that business for $800 million. So they're expected to lose 50 mil a quarter, still lose EPS. But that top line growth, as long as they keep it that top line growth, again, it's not a stock you really want to keep as a meaningful size position, but it's interesting. Maybe there can be some increased synergies in that business. Let's do SoFi real quick. So SoFi, this is a great fintech stock. They actually just launched their own stablecoin. Let's see if I can find that news. Yeah, SoFi Technologies launches SoFi USD stablecoin for blockchain settlement. Stablecoin, so the 24/7 settlement on public blockchain supporting. I just love how innovative SoFi is. If we go to their financial services business right here, their fintech services, this growth right here is what I love specifically. It's up 76%, after grew 101, after grew 140, massive growth. They're in lending too, which is also at a record this quarter. That's why I think people are just really starting to take SoFi serious. The revenue super growthy, nearly a first ever $1 billion revenue quarter, and they're making over 100 mil in net income. So, hey, Garrick said, what are you using to look at these stocks? Yeah, hey, if you want to get stocks or, you need a brokerage, if you want to get a brokerage, or this brokerage I'm on right now is in the link tree in my bio. This is my favorite app to buy stocks on, and it's my favorite app to actually analyze stocks on, man. They have a lot of cool features like all the super investor trackers like Nancy Pelosi and Warren Buffett. You can track all their portfolio and follow them into their portfolio if you wanted. Hey, Nancy Pelosi just was buying Amazon or Netflix. But anyway, if you want to get this brokerage with my affiliate link, it's in the link tree in my bio, that very first link there. It's free, but if you go and deposit $100, we'll both get some free stocks. So we'll look at a few more here. Taiwan Semi here. Yeah, let's look at Taiwan Semi real quick. This stock is NVIDIA just designs their chips. Taiwan Semi is the one that actually manufactures them. And hey, this brokerage is telling me, I did not draw this. They always draw whenever there's tentacles, they draw it for you. It says that there is a megaphone top or something. Anyway, let's go. This is a great stock to diamond hand. The valuation is good. They're trading at a 25 forward PE. So 25 forward PE, and let's see here, their market share right here, their market share is 7, it went from 62 to 71. They make these 5 and 2 nanometer wafer chips. And if we go to their bottom line, the net income, this is the best part, the growth here. 14 billion of after-tax net income, that really is after they paid $2 billion of taxes. So the revenue's up by 35 and net income is up by 44. So they're expanding margins, they legit have 45% net margins. Incredible. Plus a really good balance sheet. It's like NVIDIA with the higher yield. You get a 1% dividend yield. They also, most of the chips they make are in Taiwan, but they just completed 2 months ago, their first ever Blackwell chip production in their Phoenix fab. What's this? Taiwan Semi to launch 2 nanometer production with full initial capacity booked. Yeah, they're booked out through the end of 2026. Monthly production is expected to be 100,000 wafers. Requiring an additional $29 billion of investment. Yeah, Taiwan Semi is just in a great spot. This is the kind of stock that I think is just going to continue to climb higher and higher. Great one to never sell. Yeah, Micron too. Micron, the valuations are cheap. That's the thing. If you go to Micron specifically hit an all-time high today, this is the kind of stock they're just going to continue to go higher and higher, in my opinion. The forward PE is a 6.9 forward PE. If we go to the EPS estimates, and these are updated because they rose the guidance, the net income per share was $4.60. It's expected to be $8.25, and then $9. It's insane the demand that Micron has, and that's a stock. If I own shares, I wouldn't trim that one or sell that one. I really like the platform, but their fundamentals look sketchy. Wait, the fundamentals of the platform I'm on? Actually, this platform I'm on right now, or this app that I'm on, this brokerage, is actually publicly traded. And here is, this is kind of cool, So this app is called Moomoo. If you look at the very top left, this stock right here is called Moomoo. So this is this app that I'm on right here, publicly traded. Even if this company goes bankrupt, this app that I'm on goes bankrupt or whatever, you're still FDIC insured for $250K. But look at this. It's good to know that this company's printing money. They made $413 million in net income this quarter. This app I'm on, they have, let's see, 28 million users. Funded accounts at 3 million. So yeah, it's a pretty cool brokerage. Yeah, if you want to get this app, it's in the link tree in my bio, first link there. One of the ways brokerages make money is this interest income, and I want to show you that. That's 47% of the revenue right here. Oh my gosh, please load. Yeah, that's up 80% year over year. What is that money? Well, if you look at the middle of my screen right now, they give this to you for free. my idle cash earns a 3.35% APY. Well, they actually on the idle cash, they earn like a 4% APY, and they give you 3.35% of it, and they pocket the difference, and that's how they make it's just pure margin for them. So yeah. Anyway, and this is a free brokerage too, costs nothing. That's how they can afford to do it. So anyway, if you want to get this app I'm on, the link tree in my bio, very first link there. It's an affiliate link, so if you go and like deposit, we'll both get some free stocks. But yeah, guys, that'll wrap up the stream. We've been streaming for over 3 hours now, and my head really does hurt. I've just been talking in a room for 3 hours, haven't moved and gone to the restroom. So let me end this with a quick portfolio update. If you want to hit the follow button too, we stream every single day. I sell nothing. I have those affiliate links, but I have no course book, WhatsApp. I'll never follow you, DM you. I don't coach. I don't do nothing like that. So I know you own Bull. But do you think you can make significant market share from Robinhood and other brokerages? That's a good question, actually. I do own Weeble, Robinhood, and Moomoo. So here's my Robinhood account. We're up 16% year to date. And just today, though, we were slightly down on the day. Here's our total percent change on every stock. So luckily, we're up on every stock except for Carlisle. They had a little one-time adjustment to their volume. Actually, I can prove that too. If you ever see a stock fall massively after hours, here's how you can tell if that's fake. So yeah, look, there must have been like one share of volume traded at that price, because yeah, that's Robinhood just has. Whenever there's like one share, this is a classic example of when you do a market order. You never do a market order, because that's whenever you buy a stock in market order and you're like instantly down 1% on it or something. It's because you did a market order and not a limit order. But anyway, yeah, here is our dividend portfolio where every stock in here pays a dividend. Obviously, most of these are like dividend growth stocks. Here's our Roth IRA. Our Roth IRA is just a tax-free retirement account. It actually did pretty good today. Innodata was up, 10%. Weeble was up 4%. HCA was up 1.4%. So nice. We also have a Weeble account. Our Weeble portfolio, how'd that do in the day? We were up 1.53% on the day. Open profit and loss, we're only up at 18% all time. So we've definitely underperformed. So don't listen to me. I'm not an expert. I'm just a college student. But yeah, these are the biggest movers. AMD was up 6.5%. SoFi's up 3%. Robinhood's up 3%. Dave. We had a few losers like Southern Company, Clear Security. No biggie. We were net doing really good. And finally, we have our Moomoo account, where once we buy a stock in here, I never sell it. And that's why it's called buy, never sell at the top left. And yeah, these are all the stocks that we own in here. The reason we've done so good year to date, we're up 80% year to date, is because we didn't sell before today. A lot of these names we bought on the dip, like Amphenol. We actually bought this one a couple of days ago. This is one that I love. We're buying this one at 129. But like Comfort Systems, we were buying this one during the April dip way down here. And we've just been diamond handing ever since. Coca-Cola Consolidated's another great one. They had a good day today. So yeah, that wraps up the stream. Hope you have a great rest of your day. See you all later. Hey, see you, John, and Supercar, and Nezzy. Oh, I took a position into Nike. Oh, hey, sorry if I missed some of the chats here, but yeah, thank you all for being here. Looney, John, everyone on the TikTok and YouTube stream. Oh yeah, for everyone on the YouTube stream, if you want to support me, the best way to support me is, if you want to, is subscribe to my YouTube channel. I'm trying to build up my YouTube viewers and YouTube channel. So yeah, if you just type into YouTube Nathan Robert, you'll find it. You can also rewind the stream. Hey, Narc, happy holidays. I just saw that. Happy holidays and World Free Speech. I hope y'all have a great rest of your Friday, and happy holidays. And hey, see you, Nick. Yeah. Hey, Mata, no way you're still here, dude. You stuck with me. There's no way. So yeah, if you missed anything and want to watch the beginning of the stream, it's on YouTube, my YouTube channel called Nathan Robert. I also just did a whole entire stock portfolio update. It would mean the world if you checked it out. Go leave a comment, say you came from the TikTok stream. But yeah, see you later. Have a great Friday. And thank you to everyone on the YouTube stream the most. Dang, 3 hours and 5 minutes. That might be a record for me. One of my top 5 longest streams. We just been locked in having fun. Thank you all. And hey, if you want, please subscribe. And if you still haven't already, hit the like button. If you're still here on the YouTube stream and haven't hit the like button already, it still helps.